Joining us this morning.
It was a pleasure. Always good to see you, Becky. I can't believe you have a 23-year-old daughter when you said it before.
All right, coming up, the major averages.
That is a huge compliment.
Major averages are near record levels, but family offices are looking for more alternative investments. Robert Frank going to tell us where the money is going next. Squawk Box comes back in just a minute.
Question. What was the first non-hamburger item added to the McDonald's menu? The answer when Squawk Box returns.
I can't do it! This gap! It's just too big!
Bring on the double. After my hospital stay, Aflac helped close the gap by paying me cash for expenses health insurance didn't cover. Nothing covers gaps better than the Aflac duck.
Get help with expenses health insurance doesn't cover. Find an agent, get a quote at Aflac.com. You do look like me.
At Morgan Stanley, old school hard work meets bold new thinking. Partnering to unlock new ideas, to create new legacies, to transform a company, industry, economy, generation. Because grit and vision, working in lockstep, puts you on the path to your full potential. Old school grit, new world ideas. Morgan Stanley.
We're Public Rec. For guys who don't do fussy or fashiony, stretchy, breathable, and built to fit. It's a cheat code for looking good, minus the effort. Stay you. We'll keep you comfortable while you do it.
At Interactive Brokers, independent RIAs work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform, with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
A law partner rediscovers her grandmother's artistry and establishes a charitable trust to keep the craft alive for generations to come. From preserving a cultural tradition to leaving a legacy, a Raymond James financial advisor gets to know you, your passions, and the way you enrich your community. That's life well planned.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now. And now the answer to today's Aflac trivia question. What was the first non-hamburger item added to the McDonald's menu? The answer, the Filet-O-Fish sandwich, which was introduced in 1965.
More and more family offices are looking for alternatives to stocks when it comes to putting money to work, and Robert Frank joins us now with more. Hey, Robert.
Good morning, Joe. Good to see you. Well, family offices have become the fastest growing market for alternatives and private assets. The number of family offices with exposure to alternative investments has increased by over 500% since 2016. That, according to new data from Preqin. Now, the growth outpaced wealth management firms, sovereign wealth funds, and even endowments. There are now over 4,000 family offices with alts investments. That's up from just 650 back in 2016. Now, within the alt space, so that's private equity, private credit, venture capital, hedge funds, real estate, infrastructure, all those things, family offices are favoring private credit this year. According to BlackRock, 39% of family offices plan to add or make new investments in private credit and private debt this year, with 29% planning to add or make investments in private equity. Private credit, though, is still a fairly small share of total family office portfolios, about 5%. And family offices are warning of higher fees and lower returns. With hundreds of billions of dollars pouring into private credit funds, family offices say returns have started to fall a bit, and 72% of family offices say high fees are the biggest challenge to investing in private markets. Now, for more on the family office boom in alts, you can read the latest story by my colleague Haley Cuccinello in the Inside Wealth newsletter on CNBC.com/InsideWealth. That's CNBC.com/InsideWealth. The new newsletter out tomorrow morning.
Well, people love alternatives. Every week we have another story about the expansion of things other than conventional investments. What's the problem? The stock market's great.
The argument is that when the entire American retirement system is pegged to NVIDIA stock, that could be risky. And so with 80% of American companies that have over $100 million in annual revenue, 80% of them are private now. You want broader exposure, and to get that, you need to go through private markets. That's the argument.
That's the argument, but really the rationale is, I'm rich, I'm special, I should have access to something better than the average American can get access to through the S&P 500, right?
Well, more and more they want those products to be available to everybody. But the argument was not to be special because you're rich, but because you're getting paid for that illiquidity premium, keeping that capital in longer rather than a liquid investment, which is more volatile and gets you lower returns. That's the notion. We'll have to see what happens with returns now that so much money is pouring into private credit, and private equity hasn't had exits.
It's going to compress. It's got to compress.
It's going to compress. Yeah, you're going to have to see fees come down.
I know. I was glad to see the Lowe's deal. Someone was able to sell something, from private equity.
Well, by the way, talking about private equity, it's fascinating to go look at like KKR stock, Apollo stock, some of these private equity stocks, with the exception of Carlyle. They've actually underperformed.
They're down this year. Many of them are down this year.
There's all of this talk about moving, the American public into 401ks that have access to these funds. It's very interesting that in the run-up to that, they moved. They definitely moved.
And they're still up from the election because they had a huge run-up, but they're sitting on 30,000 portfolio companies now worth around $3 trillion that many question, are they going to be able to exit at the same prices or better that they entered in?
Right. So my fear is not...
And if you have more people who are investing in those things, that's a good way to get it, right?
That's the only way to get it.
This is what I worry about, because there's going to be a hot potato game that's going to happen right now. It might work long term, but in the short term, what I worry about is once all of these investors jump in, they'll unload some of this stuff, and it won't be, at least early on, it's going to be tough.
Yeah, we'll see. We'll see.
Thanks, Robert.
Thank you, guys.
Okay. Coming up, OpenAI's CFO, Sarah Frier, is going to be right here for an exclusive interview. You don't want to miss it. It's at 8:10 a.m. Eastern Time. We have so much to cover with her, from valuations to the fierce competition in AI, for talent, and so much more. Squawk Box coming right back after this.
Inside Wealth is sponsored by PGIM, a leading global asset manager across public and private markets.
At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise. Explore PGIM ETFs today.
Doors bring us together. A dedicated Fidelity advisor can help you open those doors.
Can you sign this for me quickly?
She's so ready to take over. With a comprehensive plan to help grow and protect your wealth for generations. Doors were meant to be opened.
Decking and railing that stands up to whatever you ask and bends to your every whim. Trex, performance engineered for your life outdoors.
Investing. You buy low, sell high, jump on that trend, ride the wave. Stop. That's not how investing works. You're not a child playing a game. This is grown-up business. The real thing. You know wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
Humankind. That's what we are, giving of our kindness and mercy, like the thousands of life-changing surgeries and trainings provided by Mercy Ships, because we're all in the same boat called humankind.
Food is sensual. Food is beautiful. Act 3 invests in and helps build restaurant and entertainment companies. Ambition is about making a difference in the lives of other people. What do we need to do today to create the future that we hope for?
Oh, Cole's mom. If I buy both, am I spoiling her?
At this price, you're spoiling you.
Anyway, how about a football tee? I like a football tee. You can play football. You're a very good thrower. Yeah, she's got a lot of strength in her core.
I make some good summer barbecue, but I can't match these two hearty barbecue triple stacks from Firehouse Subs. Brisket smoked low and slow, stacked high with turkey and ham, and that slaw crunch, get out of here. Take it from a real firefighter. You gotta try these subs.
When we are together, there is nothing better. When you're here, it feels like home.
Craft together something special with Kraft Natural Cheese.
Ugh. Some water has questionable taste, but you have great taste. Crisp, refreshing, delicious. Clearly, Brita.
Coming up, while central bankers gather in Jackson Hole for the Fed Symposium, we've got one of the potential candidates for the Fed chairman job right here in Times Square. We're going to have David Zervos on. He is the Jefferies chief market strategist, a CNBC contributor, and yes, he's on the list. He's going to join us next. But first, as we head to a break, check out today's moves in cryptocurrencies. Right now, you're looking at Bitcoin sitting at about $113,000. Squawk Box, coming right back.
Meet Luke and Jason from Fire Department Coffee. Two guys with a dream and a little help from Walmart along the way.
We make coffee that supports our community. And Walmart's played a big part. You know most of what Walmart spends goes to products made, grown, or assembled right here in the U.S.?
So we can invest back into our community.
Walmart, huh? Who knew?
Now you know, Jerry.
And that is how you brew a mighty fine American business.
I'm happy. I'm happy to have gold. I have gold as a hedge against inflation. I know that this is the only thing that represents real money. I've had a portfolio of course, stocks, but no one ever talked about gold as part of your portfolio. To make a long story short, I end up buying gold for the first time. And boy, was I excited. What I like about owning physical gold is that I'm in control of my money. No one else has his hands on it, but I can put my hands right on it right now. If I need it right away, it's there.
If you would like to learn more about why physical gold should be an important part of your portfolio, simply call to receive the complete guide to buying gold, filled with new and exclusive information, including facts you should know about making any gold, silver, platinum, or palladium purchase. Call now to also receive our new 2025 Global Gold Forecast Special Report. Inside, you'll find the real issues on why you need to start owning gold today. You can also receive a copy of our new report, Protection in the Risk Zone. U.S. Money Reserve can walk you through the 3 simple steps of transferring your existing 401k or IRA into a precious metals IRA backed by physical gold to further protect your assets from market instability. Pick up the phone and call U.S. Money Reserve, America's Gold Authority, right now to get your free gold kit and IRA information, including the 3 simple steps for transferring your existing 401k, 403b, and traditional IRA. With more than 2 decades in business, over $3 billion in transactions, and more than 1 million clients worldwide, U.S. Money Reserve is one of the most dependable gold distributors in America.
Get exclusive reporting and data on high net worth investors.
Today's wealthy invest differently. It's not just about stocks and bonds, but also real estate, classic cars, and fine art.
Get the weekly newsletter at cnbc.com/insidewealth.
Let's talk markets, Fed, interest rates, inflation, and so much more with a guy who you probably need to know even better than you may already. David Zervos is here. He's Chief Market Strategist at Jefferies, CNBC contributor. And yes, now he is officially on the list of candidates being considered for the job of Fed chairman. So good morning. Now, do you have to watch your words in a different way, do you feel like?
I think that's probably fair to say. I would also say that, I kind of have to come at this a little bit differently than I've done in the past, where I talk more about what I think the Fed should do as opposed to what I've done for the last 15 years, which is at Jefferies and even before that, which is talk about what the Fed will do. So I'm here to talk about a much more broader set of topics.
Before we get into any of that, though, just tell us, the backstory on getting on this list, what kind of phone calls you've got, and I know that you have a relationship and you've known the Treasury Secretary for a long time.
I have. I've known Scott for quite a while. He's a wonderful guy and an amazing, he's transitioned into an amazing Treasury Secretary, but he's an amazing trader as well. And so I've known Scott. I've met the president a few times, and I've been involved with a few other folks that are part of the administration and were part of the campaign as well. So I sort of got myself closer to Washington in the last couple of years. And
we're pulling for you so much, just so we can say, David Zervos, Fed Chair and CNBC contributor. Would you give that up?
I would, if I have to, I would. I wouldn't. If they tell me, they're going to make you give up a lot of things.
That's
if you
something
do
to
this
think
job.
about before you accept. Can you manage? I was kidding about pulling for you. We're pulling for everybody.
We're other
Order
CNBC
filled.
contributors that have been
Order
on
canceled.
Fed chair lists in the past.
I don't think so.
I don't know. Lots of guess.
Order submitted.
Not a contributor.
I think the president, when he called in, he did talk about how CNBC was fertile ground for potential Fed chairs.
He did
as well.
There you are.
And
there used to be Trump Tuesdays.
So here's the big question.
Yeah.
What would you do? What would you do? Not what do you think
Order
they will
submitted.
do or should do. What would you do?
I mean, what I would do is try to coalesce the committee around the idea
Order
that
filled.
policy is actually
Order submitted.
quite restrictive. I think that argument needs to be made, and that argument is something I've been making in my research notes and in my analysis now for the better part of 8 to 9 months, basically going back into the late, basically the fall of last year. And the idea, it's a little bit wonky, but Kevin Warsh has been kind of pushing on this idea, a good friend as well, that the balance sheet of the Fed has now contracted to the point of almost being neutral after being very stimulative for a very long time. And so you're left now with rates at a much more restrictive rate without that extra kicker from the balance sheet. And so we really need to get rates back toward a more neutral level.
So it's not a Fed funds versus 10-year.
It's much more about the combination of the balance sheet and the rate structure. And I think someone needs to go in and argue and present with the 11 other voting members on that committee a cogent case for why rates are more restrictive than maybe the Fed is currently thinking, the staff is currently thinking, and the street economists are currently thinking.
Can I ask you, and maybe this is like a deep sort of, like dark arts of what's happening here, but a number of people that I've talked to that are living in the realm that you're living in are all trying to see what Jay Powell either says on Friday in Jackson Hole, but maybe even more importantly, does in September, because that will be probably the last major decision he will make before somebody gets named. And the reason I mention this is there is a view, I don't know if you agree with this view, that if he doesn't cut rates in September, the president, first of all, will think that Jay is thumbing his nose at him, but B, would want to find somebody who is super dovish.
Order filled.
Somebody who he knows he could be put in there who would get the job done effectively. But if he
Order
lowers
submitted.
rates, that maybe it somehow takes a little bit of the pressure off in terms of the kind of person he might select. Am I reading tea leaves too much?
That seems a little deep in the weeds for me. I think the idea of this meeting being such a critical meeting is probably, I wouldn't go there. I just wouldn't go there. I would argue that this meeting is an important meeting, but the importance of what Jay says on forward guidance or what the committee is doing in these set of meetings leading up to a pretty significant leadership change at the board, are less and less significant. In fact, it's becoming more irrelevant. We're going to have a committee by May of next year that's made up of 4 Trump nominees. It's going to be Michelle Bowman and Chris Waller, who were already picked by the president, then the seat for Adriana Kugler, and the seat that Jay vacates in May. So you're going to have 4 out of 7 board members that are effectively...
That's some of the news I'm seeing today about. That's maybe another one with some of the news that's out today about some others. Santelli's on this, but we'll talk about that maybe a little bit later. But my wonky question is, how does the balance sheet that you described get you to the risk being much more on growth than inflation? Why do you think that the nature of what you described with the balance sheet is, why do you think that inflation is not a problem when it seems so sticky to get down to 2 for the last mile?
I think it's been a little sticky. It's come a long way, Joe. It's come from 9.1 down to 2 and change.
But if you want 2, we're not 2. We're headed back above 3. Could be, right?
This is the art of central banking, right? You're balancing a 4.2% unemployment rate with a 2 and change inflation rate. You're looking at the future and saying, what are the inflationary pressures? We've got demographics, we've got AI.
1 to 3 is good enough for government work, is what you're saying. 1 to 3 is good enough.
Maybe when you start working for the government, you get 8-foot gimmies instead of 2-foot gimmies. I don't know.
No doubt.
I think that's probably fair. But I guess I would.
What's the size of the balance sheet, though? Isn't it still more than $6 trillion?
$6 trillion, but it's about 20% of GDP. Remember, it's related to the size of the economy, and it was 40% of GDP at the peaks.
Right, at the peak, it was more than $9 trillion, but before 2008, it was $1 trillion.
Well, and that was before we went to this ample reserves kind of more highly regulated structure where I think I would kind of put a neutral balance sheet at where we were in 2019 when we had rates at about 2%. Flat, yield curve at 2, and the balance sheet was 20% of GDP. The unemployment rate was 3.5. Inflation was 1.6.
We just never get back to these being out of these emergency contingencies where the Fed is doing so much to keep things afloat.
I mean, we've got those great tools if we need them, Becky, and I'm more than excited to use them if they need to be used. But the point is, if we go back to 2019, I don't want to go back to 2008 because the structure of the market's changed so much. That was a neutral place. There were no rate hikes, no rate cuts priced in. We were sitting at a 2% yield curve flat. We had a balance sheet at 20% of GDP, no QE, no QT. It was about as neutral as it could get with the Fed at its mandate. Full employment at 3.5 and price stability at inflation under 1. That's a good spot. That's the place we should be looking to get back to. The balance sheet is back at 20% of GDP, within spitting distance.
Let me ask you, though, to think
Rates
about...
are not at 2.
Unemployment versus inflation.
Yeah.
Tariffs. How you think about the tariff piece.
Order submitted.
There's a view that it could be a one-time thing, and maybe it is, but it's probably a rolling one-time
Order
thing.
filled.
You're not going to see
Order
inflation
submitted.
all happen in a month or two. You're going to it'll roll
Order
because
submitted.
people are going to adjust, and that adjustment could take 6 months, could take a year. I don't know. And so how you think about
Order
that
filled.
up against the employment piece?
You know, I've been in a unique position in my discussions of the tariffs with clients and in public as well, just saying I don't think it's nearly as big a deal as everybody's made it out to be. I thought it was a very tactical set of moves that the president made, sort of game theory, classic art of the deal, go in,
Order
go big,
filled.
and then
Order
kind of
submitted.
drive it all back a little bit and get to where you ultimately want it to be. And I think that's largely been the case. We've had a tactical move to get to 10 to 20, maybe 30% tariffs in some cases. I very much stand with the Treasury Secretary in thinking these are one-off price level shifts, and you have to look at inflation expectations and say, is something happening with inflation expectations where people think this is going to continue to metastasize? And the reality, Andrew, is it's just not there. The break-even inflation data, and even now the survey data, which I think became very noisy because of political division, that's come back down. So I feel like anchored inflation expectations, which really is, I think, the #1 goal of the central bank, anchoring long-run inflation.
Order filled.
You look at 5-year break-evens, you look at 10-year break-evens, you look at any of these
Order
tips,
submitted.
measures, and you look at the survey data, like
But
it's just, it never even got de-anchored when we went to 9%, and certainly the tariffs aren't de-anchoring them today.
But David, you think full employment is 3.5%? Because most people would say it's between
might even be lower,
5%.
I might
even
be lower.
With AI coming in?
I think
because if that's the case, you're going to focus on the unemployment side of things far more than the inflation. If you're willing to say 1 to 3% is okay for inflation, but you need
immigration
3.5%
related?
lower.
I think it's more the technology story. I think it really is like what we saw in the 90s, which is we were able to bring more and more people into the labor force in various ways without creating a lot of inflation because we had that tailwind of technological advance driving disinflation.
You don't think AI is going to put people out of work, that it eventually brings more people back in?
It'll displace many existing jobs, create opportunities in other places, and we may be seeing people move from one set of careers to more, you know, desk jobs to vocational jobs, and we're already seeing
this time than
well, it seems like the 90s to me.
It does.
I like the 90s. I like the 90s.
It seems different this time that this is more. This is not just a Luddite moment where you go from buggy whips to automobiles, but this it could do everything. And we go to UBI. We don't go because we're all fat and not working.
Maybe in this city.
Let me ask you a different question. I think you know that most of the people on the board of the Fed today, and I think most economists, talk about the independence and importance of the independence of the Fed. And they want to know that the person who's leading it is full-on independent. That's what they want. That may not be the reality. And the question is, do you feel like you can be fully independent, given your relationship with the Treasury Secretary, given your relationship with the President, if in fact you have a view that is at odds with the President of the United States?
Well, let's go to exactly what you said, that this ideal of independence. The reality is the Fed is not independent. The Fed has never been independent, and the political pressures on the Fed have always been growing and continue to grow, whether it's letters from Maxine Waters or Elizabeth Warren pounding on the Fed to be cutting rates around election times, which was continuously happening, and Sherrod Brown when he was there, or behind-the-scenes movements by Treasury secretaries trying to influence Fed chairs or administrations. All of that is there, and recognizing that is actually a critical feature of being a good fiduciary and being a good investor. One of the things I do at Jefferies is try to help our clients understand the Fed reaction function. Politics is in the Fed reaction function.
I'm not disagreeing with you that politics is in the reaction
Order
function.
filled. Order submitted.
What I'm asking is something slightly different. I think
Order
you
filled.
can
Order
look
submitted.
at Jay Powell, who was put in the role
Order
of
filled.
president,
Order filled.
and
Order
he is now
filled.
clearly
filled.
at odds
Order
in terms of his
submitted.
opinion of the universe and how the economy should be managed with the president.
Yes.
So by default, you would look at Jay Powell and say, there is somebody who's independent. You may think he's wrong.
Order
Actually, I
submitted.
disagree with that. I think he's actually quite
Order filled. Order
and
submitted.
he's dependent from the other side of the equation.
Right.
He's operating politically from the left.
Okay.
Or let's put it this way, from the anti-Trump side of the equation.
Sure, whatever it is, but my point is you would look at him and you'd say he is independent from the president in that he is not doing what the president is telling him to do, correct? You're with me.
From the president, but not from politics. Politics, what drove the September rate cut of 50 basis points? Was that political?
I think what I'm asking you is slightly different.
Yeah.
What I'm asking you is, if the president says to you, hey, I need you to do X, Y, Z, do you feel that you can say on TV right now that if you actually in your own brain are an independent human being and disagree with the president, that you can go out publicly and say, you know what? I'm not doing that because I don't think that's the right thing for the economy.
I think you would take into account, Andrew, all of the political pressures that come from Congress, that come from the administration, that come from all of the variety of sources that they come from, and you make a decision which is going to be consistent with the goal of the institution, which is maximum employment, price stability, and making sure inflation expectations are anchored. If the president is saying something that you agree with, you shouldn't just fight with him because you want to look at it and say, oh, I'm potentially not independent because I'm agreeing with the president or a congressman.
I think we can agree from a perception of independence perspective that it is not helpful. I think you agree with this. It is not helpful for the president to be publicly espousing particular views about the Fed because it, in fact, puts whoever's in that seat in a much more complicated position to actually have credibility with the marketplace.
I don't even know if I would go there. I think if the president would like to say things about interest rates and discuss them openly in public, he should be able to do so. He has views that I think are interesting and actually have been, in many ways, correct. What he was arguing in 2018 and 17, for example, turned out to be entirely correct.
I understand that, but don't you believe that? Do you believe the marketplace cares whether the person who's in this job is considered a puppet or not?
I think that if you are going to be in this world of politics in Washington, D.C., you're going to have influences coming at you from every direction, managing
Trump.
those.
But Trump.
I'm not saying it's about Trump.
But Trump. But Trump.
You know, you do.
Don't you understand? Trump.
You do a good impression, Joe. You do a good impression.
Thank you.
I think at the end of the day, you're going to manage all of the political forces that come through.
This is not even about Trump. It's just about the job.
Okay.
This is.
He just told you that he thinks that Powell is totally biased based on his left.
Or his, I don't want to say.
How about
I think he's.
Did you ever hear
a pro-deregulation guy?
Did you ever hear a word from Powell about what happened during the early part of the Biden administration and the spending and what we were doing? And yet, he immediately, no, he didn't.
Yes,
he immediately weighed in. He immediately weighed in on tariffs.
David, if you want to be an intellectually honest guy, explain to Joe what you looked at all the things that Jay Powell said.
I will say one thing, and I'll give Andrew a little bit of a rope on this.
Make it
right, which is, the chairman did push back on a lot of really crazy
pandemic
stuff
stimulus
from the regulatory side of the equation. Michael Barr, what he was doing.
I'm talking about what engendered the inflation.
Yeah,
He stayed at zero. And he stayed at zero and didn't say a word.
Okay, I'm going to give him the regulation and the woke stuff. I think he pushed back on both of those.
All right, that's different.
Okay.
That's not what I'm talking about.
I'm talking about what you're talking. That's why I said I'm going to give him a little bit of rope. I'm not giving him all of it.
Talking about the $5 trillion that both Trump and Biden spent.
I think he stayed out of the fiscal debate.
He did until tariffs.
And then tariffs came along, and he entered into.
Oh my God! Now we got to worry about after you let inflation go to 9%. Now you've got religion on tariffs with 2.7%.
As you said earlier, Joe, economics is not a science.
No.
It's an art, and they're trying to put too much precision.
It's almost a pseudoscience.
Yeah, it could be voodoo as well sometimes. But
look who wins Nobel Prizes. They have diametrically opposed opinions. They both win because there's no answer. There's nothing that's true.
It makes it a great field. It's like the market. I mean, it's a puzzle you can never solve, which I love. I love the whole field. I've been a passionate student of both economics and the markets all my career. I go back and I think the Powell Fed has had some pushback, some legitimate pushback on the administration in areas where it went way over the edge. I give him that. But I think Joe is absolutely right that this is an administration that did not fight back on some of the worst Biden policies. And that's come back to bite us.
David, early in the discussion, you said that you would like to be able to go in and be able to make your case to the Fed, to the recognition that the FOMC is not run by one person.
That's an important point, Beck.
You have to build a consensus. That's an important part of the job. What do you think about the people who are at the Federal Reserve, particularly the voting members of the FOMC right now? How do you think you would go about that? Do you have a relationship with any of them?
Well, I've been at the Federal Reserve twice in my career. I spent all of '09 there as a visiting advisor to the board, and I started my career 34 years ago. I walked through the C Street entrance of the Eccles building, which is now under deep construction, into the beautiful foyer that they're fixing up, and started my career as a summer research associate. So I have a lot of deep history with the institution. I know a lot of staff members and ex-staff members, and I think I've got a pretty good understanding of the place, and I think in terms of coming to a view and coalescing around a view, I do think people are open to listening to alternatives and looking at what has happened in the course of this post-pandemic period. You have to put the puzzle pieces together. 2023, you would have every economist come through and sit here and tell you a recession is coming. The Fed had raised rates 400 plus basis points going to 5.25. We were going to get a recession with almost 100% probability, the street economists. And I said something very different. I said, you know what? This balance sheet's so big, and it's exerting so much stimulus into the system that 500 doesn't feel like 500. 500 feels like 200 or 300. and we're not going to get a recession. It's actually not restrictive monetary policy. That argument, I think, holds the test of time. And it's part and parcel the argument I have today, which says that we got lulled into this false sense that high rates don't hurt us because of the balance sheet. Now the balance sheet's back down. Now they can kind of hurt us.
Then you don't need to cut as much because.
Well, no, you do because these rates are way too high back.
Yeah, but if those rates
4.25 is way too high.
It was all about the balance sheet, and the balance sheet is fixed now. You don't need to cut as much because every one of those cuts would be felt more impactfully.
But no, they will be more impactful, but you have them at a very high level. They're way above neutral. If I'm making the argument that we're going back to a 2019 style neutral level, we're 200 plus basis points above neutral. That's a lot.
Right.
So I think that's where the starting point is. You're not going to have anyone, no one can go in on day one in that committee and sit at that board table and go, we're cutting 200 basis points. It's impossible to do. It's impossible. You have to go intellectually in there
Order filled.
and have a debate and coalesce a committee with a lot of different views around this idea that policy is quite restrictive. And that's the answer to Andrew's question, is how would you approach it? I think that's the way you have to approach it, because there's no dictatorial structure here. There's a lot of separation of powers across districts and presidents and governors. That said, 4 seats on the board will be
This is where we didn't mention it, but so Bloomberg's writing it up that Bill Pulte is saying, who is the director of federal housing, that Lisa Cook has mortgage issues. And whether that, and so it might be maybe more than 4.
It might be.
I don't know. We'll see what comes of that. How come we haven't talked about that here?
I've been longer story. I've been going back and forth with
Okay. David, thank you. Appreciate it.
Always a pleasure.
Great to see you, sir.
Good to see you guys.
All right, Squawk Box coming right back after this.
Comcast Business Advanced Networking and Security Solutions help turn businesses into logistics mastering, supply chain transforming, seamlessly restocking, frictionless paying, poke bowl ordering, cyber securing, mobile access granting, data managing. Welcome to the worlding modern businesses. Powering the engine of modern business, Comcast Business.
In any business, you ride the line between numbers and people. What's right for the business and what's best for everyone who depends on it. Solving today's challenges.
Order filled.
While creating future opportunities. It takes balance. CLA, CPAs, consultants, and wealth advisors will get you there.
At AG1, our customers deserve the best, and the best just got much better. AG1 Next Gen has launched with upgraded B vitamins and probiotic blends backed by gold standard clinical trials. It's time for the next generation of AG1.
Order filled.
He sure knows these parts well.
Folks say the planes whisper to him.
Order filled.
Outlaws in 500 feet. Rerouting.
Order submitted.
Innovation changes everything.
Order canceled.
With
Order
one investment,
submitted.
you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
I'm an agent with Albanker Insurance.
Captive agent here.
We're locally focused and community driven, here to support small businesses with flexible, customized coverage.
We have smaller risk appetites for that sort of thing.
Call Albanker Insurance and save today.
Getaway today.
Welcome to the show, the one with unimaginable power and endless entertainment.
You can't help but be awed by it all.
Sunday Night Baseball. Every Sunday, all season on ESPN.
All right, welcome back, everybody. It's 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Our top corporate story today, Target, the retailer rolling out CEO succession plans along with its quarterly results. Right now, that stock is down by about 10%. Courtney Reagan's here, and she's got more on this story. Court, good morning.
Good morning. It's good to see you all. So Target CEO succession getting more attention than its results this morning. After more than 11 years as CEO, Brian Cornell will transition to executive chairman at the end of the fiscal year, so February 1st. Current COO, former CFO, and 20-year Target veteran Michael Fidelki will take the top job in February. Fidelki told reporters, I'm, quote, stepping in with urgency to rebuild momentum and return to profitable growth. He's got three priorities. He says, first, we have to lead with merchandise beyond the occasional design partnership. Two, we have to create a consistent experience for shoppers. And then third, use technology better to improve speed and efficiency. He focused a lot of his discussion with reporters around urgency and moving faster. Now, Fidelki has work to do, to be sure, to get back to growth. Target has had a rough several years post-pandemic highs. Comparable sales have been inconsistent in-store and online. Operating margin is a little over 5%. That's well below the 8.4% peak in 2022. Shares down 22% this year. Now, under Cornell, the retailer has had inventory missteps. It took and then changed positions on a number of political and cultural issues that generated boycotts on both sides and hits to traffic and sales. But Cornell has overseen $34 billion in revenue growth since 2014, the growth of its private brand portfolio. It acquired Shipt. It transformed the shipping and distribution network to speed up shipping and many same-day options. Cornell leaned into stores. He really invested in these tired locations. He built out a network of small formats, and this was when competitors were closing doors. It was met with a lot of skepticism at the time, but turned out actually to be somewhat helpful. Now, shares have grown 81% under Cornell's tenure, but that's compared to 96% growth in the XRT retail ETF in the same time. 150% gain for shares of Best Buy, 309% for Walmart, almost 400% growth in shares of TJX, which likely has also taken some share, too. Kohl's, Macy's, Gap, they've all fallen. Macy's down 78%, Kohl's 76%, and 51% downshift in shares of the Gap in that time. Now, Target also did put up a slight beat on earnings and revenues, comparable sales, too, although all three were below last year's level. Traffic and sales, they did accelerate from the prior quarter, but traffic and transactions are below last year. And when asked about prices, executives at Target told reporters that only raising prices, if they have to do that, that's a last resort. Inventory up about 2%, and Target is maintaining its full-year guidance for low single-digit declines in sales and reaffirming this very wide earnings forecast of $7 to $9 adjusted. Digital sales did grow 4.3% in the quarter. Those also have been up and down over the last several quarters.
Court, we spoke with an analyst, Stacey Widlitz, earlier this morning, spoke with Manny Chirico, who used to run a company, a retail company, PVH. They said that the disappointment they think is from Target not turning to an outsider.
Yeah, I can understand that, and that was a lot of the questions that have been asked, I think, by those of us that follow the company closely as well. And interestingly enough, Brian Cornell was actually the first outsider CEO Target's ever had.
Right.
He replaced Greg Steinhoffel after the data breach, if you all remember that.
2013.
Yeah, exactly. So that happened, and then they brought in Cornell as an outsider. And, you know, for many years, as we sort of just went through, he did a lot of things that really did seem to help Target.
Getting out of Canada was a big deal.
That was a big deal. Yeah, exactly. Starting it, but then pulling out of it actually fairly quickly.
It's been 12 years since the data breach.
Yeah, remember how big that was? And then there have been so many other ones, but that was really the first big high-profile data breach.
It's
was
fine
Target.
for you guys. 12 years goes like...
It goes fast.
It does. It goes fast. So, I
had to fly out to Minneapolis when that happened. I remember. It was like right around the holidays.
It was a big deal. And then, obviously, so many others have happened since then, but that was a really, really big deal at the time. And then they brought in Cornell, who was an outsider. And then on the flip side, you have Fidelki, who has been there his whole career, started as an intern, Big Ten guy, went to Iowa for undergrad, and then Northwestern for grad, held a lot of positions, HR, CFO, COO. And, Target's had this role, John Mulligan, before Fidelki, who was CFO, but also COO, and then he was interim CEO. So Target sort of has a recent history, too, of moving folks around, having them try out all sorts of business silos. So, look, I think it remains to be seen if this is going to work or not. I understand the disappointment because of recent years. 2022 is really sort of the peak when you're talking about share price, operating margin. I think the all-time high was something like $266, and now we're at 105 before today's action.
It was interesting to see some of those other stocks. We'd compared it to Walmart and the S&P 500. It's well below over that period of time. You forget how some of these retailers have really stumbled down 80% over some of these times. Ken Langone is a mentor of Brian Cornell's, and he's spent some time with him too. But if you put money in this when he started and you left it there that whole time, you have not performed as well as you would have if you put it in the S&P 500.
You would think it's good news, bad news. It's like, oh, we're getting someone who knows Target inside out. He's been at every part of the operation. Yeah, we're getting someone who's been there with Target inside out for...
Order filled. Order canceled.
And he was asked, they were asked about this.
But he's partly responsible for what happened with the company.
And he was asked about this, and he says he comes at it with fresh eyes, and he talked a lot about speed and urgency. I hear what you're saying. I'm just telling you what the response was.
I'm just looking at the market reaction.
When we were asking that exact question.
Yeah, look at the market.
The same thing with John Stankey at AT&T. And he's done a very good job of turning that company around.
Yeah. That's true, though. Yeah, he was... so no one really knew whether he wanted to do all the media stuff or not. He was totally on board, but then he didn't last long. Didn't keep it. Yeah.
Court, thank you.
Thank you.
Thank you. Coming up, from the launch of ChatGPT 5 to Sam Altman telling reporters that we're in an AI bubble. OpenAI has been making headlines almost every day over the past few weeks. We're going to be speaking to OpenAI's CFO, Sarah Friar, right after the break in an exclusive interview. Don't go anywhere. We're coming right back.
Doors bring us together. A dedicated Fidelity advisor can help you open those doors.
Can you sign this for me quickly?
She's so ready to take over.
With a comprehensive plan to help grow and protect your wealth for generations. Doors were meant to be opened.
You buy low, sell high, jump on that trend, ride the wave. Stop. That's not how investing works. Wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/hire.
This is more than a mattress. This is the Grand Luxe, where thoughtful luxury meets the art of sleep. Featuring the finest natural materials, every layer, every stitch is crafted for unparalleled breathability and support. Sustainably sourced, meticulously crafted. The pinnacle of conscious comfort. Because luxury isn't just how it feels, it's how it's made. Experience the Grand Luxe mattress by Avocado. Dream of better.
Overtime's about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to sophisticated investors, beginning investors. I'm always learning.
Closing Bell Overtime, weekdays 4 Eastern and streaming on CNBC.
To throw the best tailgates in Texas, you need the highest quality beef and HEB certified meat cutters like me.
And me. As experts in all things meat, we hand cut and grind fresh beef 7 days a week.
Need a custom order for game day? We'll make the cut.
We'll even tell you the best way to cook, season, and serve it up. High quality beef and custom cuts. No one does tailgating like HEB. One more reason that?
At my HEB, here, everything's better.
My name's Aria. I'm 11 years old and I'm from United States.
2, 1, go.
I would love to come play for Barcelona someday and play on the same fields that they play on.
Que que haya marcas como Bimbo que se preocupen y ocupen de crear experiencias, pues es algo excepcional.
Hear more about my story.
Order filled.
Kind of a gray shot there at the White House. Maybe we've got a little bit of gray here, too. Joining us right now, though, at the table, this is not gray at all. An exclusive interview with OpenAI's CFO, Sarah Friar, at the table. It's nice to see you. We talked to Sam just about 2 weeks ago now when ChatGPT 5 launched. There was a little bit of consternation in the week since about sort of what is going on with the model, some shifts in the model. I will say that it seems like it's gotten a little bit better from some of the problems that first emerged right out of the gate. Have you been experiencing this?
So, I mean, I think with any launch, when you have 700 million weekly active users, you start to find people are very opinionated. They've come to love their ChatGPT. And frankly, as we've released things like memory, it's become more and more your ChatGPT. But as we've come out of the gate, we're seeing actually acceleration in Plus and Pro subscriptions. That's a good sign. People are seeing a lot of value. And we're seeing really nice momentum in the enterprise, great momentum with developers.
Well, that's where I was going to go. Coding and developers. Some people have tried to describe this as an anthropic killer. And so I want to understand what you think has happened in the last week. I know Cursor's obviously taken this on and has made it its default.
Yes.
But what are you hearing and what kind of reaction are you getting from the coding community?
So developer outcome was actually great. I think our numbers were up something like 50% just week over week on the number of tokens and so on being used. What we see is tokens in particular for agentic behavior and so on almost doubled. Reasoning, which is what I get really excited about because that's a place where I think we've really extended our lead, was up 8x in terms of usage of the reasoning components of the model. So
okay, so tell me about this.
Motion.
Sam has a dinner, I believe out in San Francisco.
He does.
And he says at the dinner, though, this is the famous dinner in the last week, where he says that there could be an AI bubble that's taking place. Do you believe there's an AI bubble? And I say that in the context that there's apparently a secondary sale of some of your private stock that some of your employees may be trying to sell at a $500 billion valuation.
So first of all, I think what Sam said and what I fully agree with is we think AI is the biggest thing, the biggest era that we've seen to date, right? Those of us who've had the benefit of living through the internet era coming upon us, mobile era, AI is bigger than all of that. And I don't think any of that is slowing down. If you look at infrastructure builds and so on, which you all care about, those stocks. In terms of can there be moments where people invest in things that don't come to fruition? Absolutely. Happens in every era. And I think that's what Sam was saying, is that there will probably be investments made that are not the best of investments. But we still feel like the AI era is upon us and that we're leading the pack.
Let me ask you something, actually. As somebody who thinks about that, there's a lot of people who are trying to create startups, AI-related startups, and just other startups. And what kind of moat anybody is going to have around any kind of business in the future, given that arguably, if this works as well as it's supposed to, I should be able to build anybody else's company and break through tomorrow.
So I think a couple of things. When I talk to VCs in particular, I always ask this question because they're thinking about their portfolio. And so what I look for in an investment around AI right now is, number one, are you solving a real problem? It sounds really trite, but sometimes I think people try to solve problems that don't really exist in the world. Second, is there a true business process that's quite complicated? I think in a lot of cases, people are looking for the shiny, bright object, but there's a lot of just hardcore, like in my world, like finance, that now can be done agentically with really complex business processes. And then do you have access to data that is unique? I think the stat is something like, it's a good ChatGPT question, 90+% of the world's data sits behind closed doors. It sits in university settings and company settings and so on. And so can you access that in an appropriate way? That's what I think builds competitive moat. But I do think that we're moving into this world, I call it of abundance, where you're right. Like if I want planning software as a finance person, I don't need to go buy off the shelf anymore. I can build internally the best planning software for OpenAI. Now, we still work, though, with companies like Salesforce. For example, you asked about GPT-5. They were one of our real reference customers. They're using it for Agentforce. And so it's a good example where even the world of enterprise software, they're grabbing hold of this. And I think the leaders will lead by continuing
Okay, let me ask you a
deploy
data
it.
question, because
Yeah,
people have
go
also
for it.
talked about if you have the data,
Yeah.
that can be a super valuable component part. I had long thought that Google should be the winner of this whole ballgame because it has my email, it has my calendar going back almost 2 decades practically, right? I mean, it's unbelievable. And yet, one of the things that's happened even in the last couple months now is you, ChatGPT, and by the way, Anthropic and others, can effectively port in to that same data stream.
Yeah.
Now, so there's 2 questions. One is, should Google be allowing anybody to port into that data stream? That's what the customers are demanding, so they think they need to do it. I don't know if you would do it. And B, if that's the case, it may very well be that this idea that data is the sort of gating factor. Data will always be the gating factor, but it may be that those who have the data are going to have to open it up to everybody.
Yeah, look, I think when customers say it's not Google's data and it's not, any software data, it's my data, right? This is what I've done with my employees, with my customers, and so on. So we've all built connectors in.
Order
it's actually been one of the
submitted.
reasons the enterprise business has been so strong. If you look at our business in the last 6 months, what's really outperformed, ChatGPT has been amazing on the consumer side, but what's really outperformed what I see is enterprise and API. And that's connectors happening. Because again, as people come to work, they expect to be able to do an enterprise search and for it to be able to go look inside of my Slack and my email and my calendar and so on. So it's making it incredibly valuable. And then as we look forward, I think what you're starting to see is memory getting overlaid on top of that. It starts to really understand who I am, both as a professional or as an individual, and you connect that data to what I am and how I like to search. It's blowing open the search market. I think we've gone from something like 6% share overall to 12% in 6 months. And I think that underestimates, by the way, because when you are doing a conversational search in ChatGPT, you probably go back and forth 5, 6 times. That doesn't count as 5, 6 searches, which is what Google would count as. Counts as 1. So I think we're really underestimating how much bigger search is becoming, but how much share we're taking.
Can I ask you a big sort of economic question? And we were talking about the Fed and how the economy is going and everything else. And one of the things that's happening is whatever you think is happening with tariffs and everything else, the economy is absorbing a lot. In large part, I would argue, because of the AI boom, the amount of money that some of the big companies, Microsoft, Google, and others, and yourselves are spending on CapEx, and it trickles into the economy in so many ways, whether it's in construction or electricity or engineering or energy or real estate, all of it. This either gold rush, it's either a gold rush or a sugar rush. And how long you think that build out really lasts? Because it may take several hundred people to build a data center, but it only takes 5 or 10 to operate it.
I think we are so in the early inning. I think a lot of prognosticators want to call it like we're on the sugar rush. We're not. It's more like the railroads or the build out of electricity than anything I've seen. The internet, it turns out in hindsight, was actually a relatively CapEx light build out. And so I think we are just getting started. Now we have to do a lot to figure out how to make data centers more efficient, to think about new ways to power them. But in terms of AI, it is voracious right now for GPUs and for compute. The biggest thing we face is being constantly under compute. That's why we launched Stargate. That's why we're doing the bigger builds, as you see, with Microsoft, but with Oracle, CoreWeave, and so on. And we're just getting started.
How reliant are you on Microsoft? And if that partnership is not as strong going forward as it has been to this point, what does that mean? They've provided a lot of the money and the power for doing these things. Can you do it on your own without them at this point?
Our relationship is changing because we've gotten so much bigger, right? Today, if you look at the scale, right, after ChatGPT launched, we did $1 billion of revenue in the first year. Took us another year to do $1.25 billion. We just did our first $1 billion month last month. Wow. So the scale is massive. And so as with anything, we now need multiple suppliers. So Microsoft is really important from a compute perspective, but now we're getting compute supply from many, many vendors across the spectrum.
Order filled.
And I think that's good for both getting it, because we're compute constrained, but also risk management. But Microsoft will be an important partner for years to come. And I think we're very intertwined because of our IP. Remember, Microsoft's AI products are built on OpenAI technology.
2 things. What do you make of people who are trying to play owning your effectively owning your stock via owning Microsoft or owning SoftBank. I mean, that seems to be this sort of, there's like a bank shot situation since you're a private company.
Yep.
What do you think of that? And also, by the way, throw in there, what do you think of folks who are trying to, quote unquote, tokenize your shares and sort of work around some of the accredited investor rules, even in the United States, to sell your shares to folks who I don't think are on your list of, on your cap table, officially at least?
So first of all, it's great to see the investor interest, and it's a privilege to get to work with some of the best investors in the world. Like the round we just closed was 5x oversubscribed. So there's tons of demand. I think investors want direct investment ability into the model companies or directly into AI. Because you're right, today they have to do it via the larger hyperscalers, and so you're getting a little bit of everything. You're getting some access to AI, but they also have, you know, incumbent businesses that could be really disrupted. SoftBank, Masa-san, you have to give a ton of credit to just his vision for AI, both through OpenAI, but also through plays like ARM. I think on the Microsoft front, investing in us through Microsoft, probably a little bit of like a multi-step process that I wouldn't opine on, not an analyst these days. But I think our business is just going from strength to strength, and more people are going to want to have access.
What do you think of this tokenization situation?
I think we are very mindful of making sure we keep a sound control of our cap table, because as you know, it can become, you know, pretty complex fast. And so we have very strict transfer restrictions on it. So we try to stay away from too much complexity.
But so when you saw Robinhood selling your shares effectively, or selling a derivative of them?
I mean, we love that there's so much interest, but we want to make sure we're working with our investors the right way.
Is there any reason for you to go public anytime, or do you just not need it because there's so many people who want to get into anything you offer up?
I think it comes back to the strength of the business and then our mission statement, right? We always say we are here to build AGI for the benefit of all of humanity, for people everywhere. And part of what I like about a public offering is it democratizes who has access to owning and partaking in that upside. But I think right now we're proving we can raise capital at massive scale without being a public company. We can attract, retain employees without being a public company. So I think at some point in our future, for sure, we will look at it. But I think right now we're eyes on keeping the business momentum up.
But it's not in the next year.
Focus on the business first. Ultimately, the market stuff will work if your business is strong.
Let me ask you one more. This morning, news reports that the U.S. government may want to take stakes in the semiconductor companies that received money via the CHIPS Act. What do you think of that?
So I think it underscores, number one, how important that AI infrastructure build is. So what we just talked about, right? This is a place that you are going to need a lot of capital coming to the table, including sovereigns. One of the things that amazed me about OpenAI is how many governments come to us to say, we want to roll out your products in our country. So Norway is the most recent example. I think the second thing is it's becoming more than just an infrastructure play. People are seeing it as part of being a national asset, effectively being a national security play. And so our goal is to make sure our AI, kind of AI that has a democratic element,
order filled,
completely built on democratic AI, is launched globally.
What do you think of the carrot stick idea? Meaning the original CHIPS Act was a carrot. Come do something that actually historically wasn't economic.
Do you view it as a public-private partnership? Democrats love that until a Republican administration does it, and then they hate it.
I think it is really important that the U.S. government is saying AI is an incredible part of our future.
But is this okay to do it this way with industrial policy? With industrial policy, are you okay with that? I think that's the question.
What I want to see is that we can get this scale of investment going that we believe is going to be required for our business.
Order submitted.
The government picking winners and losers.
Sitting in my seat, I am short compute.
But
the only thing I know for certain is zero compute, zero revenue.
Here's my question to you.
It could be down.
No, here's my question to you. When the President of the United States calls you up on the phone and says, look, you know what? You're using Taiwan Semiconductor chips. We're subsidizing them, which guess what? Means we're subsidizing you. And guess what? We want a stake in your company, and you're just going to give it to us because that's the way this is all going to go down. What are you going to say then? That is actually the question.
I mean, I'm going to go back to what I can say, which is I want to make sure we have vast quantities of compute as a company, but importantly as a nation. I think it is that important for folks looking forward in terms of what this technology does in healthcare, in education, just across every
That sounds like it's one of those, it's different this time and it's okay. Doesn't it? It kind of sounds like that, and it might be. It might be. After what we saw where we didn't have really important things because of our supply chains.
National defense perspective.
For national defense and for what we're doing with AI. And then
I'm just surprised because most of the time you would say slippery slope, because I just gave you the slippery slope example.
And most of the time you would say, oh, public-private partnerships, the government's great with chips. We're both wearing different, we've switched back and forth on a daily basis on what we...
Because you asked me, like, is this, is the bubble over, is it sugar high or whatever? And I just told you that it's just at the beginning. And the amount of capital required is like the railways. It's like electricity. And so it's not, I don't think it can only be private sector. I think
but then it becomes like a utility. But then it becomes like a utility and becomes a highly regulated business.
And we could also keep Intel alive.
It doesn't necessarily
when it shouldn't be kept.
It's highly regulated. That's not a line of thinking.
But historically, that's what's happened. When you take government money, they become highly regulated businesses. That's usually the social compact.
And they don't fail. They're not allowed to fail. And failure is just as important as success in capitalism.
But is OpenAI going to take
in the end, I think you focus on your business, get your business going.
This is like a great philosophical and econ conversation.
She came on to talk about like OpenAI.
Yeah. Sarah Fryer.
Thank you.
CFO of OpenAI. Thank you for playing along.
She just asked ChatGPT, is industrial policy okay? What's the answer?
That is a very good deep research report, Joe. You should do that.
We loved having you on the broadcast this morning. Thank you.
So good to see you all.
You bet.
All right, still to come this morning, Jay Powell's Jackson Hole address in focus for investors this week. We're going to head to Wyoming for the latest Fed survey. Right now, though, as we head to a break, take a look at Toll Brothers stock. It is right now down by about 1.6%. The company did beat third quarter profit and revenue expectations. It raised delivery guidance and it topped home delivery estimates. Average selling price fell a little short, but the CEO did say that luxury demand remains strong despite affordability pressures. We'll keep an eye on this stock, and Squawk Box will be right back.
Investment opportunities are everywhere you turn. Do you charge forward? Freeze in your tracks? Or let curiosity light the way? At T. Rowe Price, we ask smart questions about opportunities like advances in healthcare and how these innovations will create a healthier world tomorrow. Better questions, better outcomes.
An important day is coming for every American with money in the markets, and it'll be here sooner than you think. I predict this stock bull market will end with an epic crash. I believe another epic stock crash is coming for the markets, based on 100 years of data. My name is Mark Chaikin. I spent 50 years on Wall Street, where I helped create an entire stock rating system. I've met everyone from George Soros to Warren Buffett. I got my broker's license in 1966 and have invested through 9 recessions, plus countless panics and bull markets. And I found there's one incredible indicator to help identify big market turns. I used this indicator in 2018 when I told Jim Cramer stocks would fall. I used it in 2020 to help folks get back into stocks. I used this indicator again in 2021 to beg folks not to sell when so many were panicking, and again in March of 2022 to predict a crash. I used the same indicator to predict a new bull market in January of 2023, and again in 2024 when I told Business Insider the bull market would continue. And now I'm using the exact same indicator yet again to detail why there's a 90% chance the market will end the year up in 2025, backed by historical data, before crashing in 2026. Look, if you have money in the markets, you must know 2 critical things right now. First, what to own in 2025 as the market continues higher, and second, exactly when the markets are likely to crash in 2026. I put together a free presentation that explains everything, including the exact month stocks are most likely to crash next year. You can watch my new presentation free of charge. To learn more, visit the website below.
CNBC. Live ambitiously.
Shares of Hertz up almost 10% this morning after announcing it will start selling used cars on Amazon Autos. For now, it's just in Dallas, Houston, Los Angeles, and Seattle, but the program will likely expand.
Order
and customers
submitted.
buy them
Order
right on the
order
site
canceled.
and pick them up on the Hertz lot.
Order filled.
Order filled.
Makes sense. Up next, who's going to replace Jay Powell at the Fed? Will it be a CNBC contributor? Or maybe a CNBC employee?
Order
Steve Leisman's
filled.
coming up. The results from our latest CNBC Fed survey are in, and Leisman will join us. He's where you would think he would be, from Jackson Hole. Next, he's going to get that fish off the line and get in front
Order
of the camera.
canceled.
Then later, Brian Cornell transitioning to
Order
executive
submitted.
chairman at Target. We're going to get street reaction. Squawk Box will be right back.
This Labor Day weekend, we're celebrating Bob's 200th store with the entire Bob's family across the country.
So stop in for the latest styles
And top-notch features.
at mind-blowing prices.
And free treats for the whole family in our cafe.
What if the future of finance wasn't built around averages, but around you? At Abacus Global Management, we're reshaping financial planning around the most personal data point possible, your lifespan. But it's more than just insight, it's control. As a technology-driven asset manager, we empower investors with an integrated system to take command of what matters most: your time, your future, your financial destiny. This is a new era of investing. Welcome to Abacus Global Management.
I know how to make slick-looking goggles/glasses, but I have no idea how to make slick-looking social media stuff.
But GoDaddy Aero uses AI to create social content out of thin air, like this one.
Walton Goggins goggle glasses are great gifts for all guys and gals.
There was a report Berkshire Hathaway-owned railroad BNSF was looking into a takeover. Just got off the phone with Warren Buffett. We can report that is not true.
Squawk Box, weekdays 6 a.m. Eastern and streaming on CNBC Plus.
Style or substance? Somehow, it became one or the other. But there is another choice. Not stopping until you have everything in the GMC Sierra. Or get 0% APR on select Sierra 1500 models. That's over $4,300 in average finance savings.
See your North Texas GMC dealers.
Yeah, trendsetter. Whoa, league of my own, it don't get better. No, read what I wrote, I'm a bestseller.
Looking clean, my boy.
Steve Leisman kicking off our three-day coverage of the Jackson Hole Economic Symposium with a very special edition of the CNBC Fed Survey. And boy, you got a beautiful shot there this morning, Steve.
Yeah, and we just had some live elk there. Did you see that? The Fed meets in Jackson Hole this year, Andrew, amid unprecedented presidential pressure for a rate cut, unsettled questions about the next Fed chair, and tariff inflation. The CNBC Fed Survey Special Jackson Hole edition found respondents believe the president is most likely to pick NEC Director Kevin Hassett to replace Fed Chair Powell, but they think he should pick former Fed Governor Kevin Warsh. Some tight results there. About 70% of respondents think Powell's speech will be neither hawkish nor dovish, but neutral. 29 respondents still see 2 rate cuts coming, even while 63% believe substantial price increases remain on the way from tariffs. Okay, on who the president will pick among the 11 named candidates, Hassett leads, followed by Fed Governor Chris Waller, Warsh and former St. Louis Fed President James Bullard. Mickey Bowman in the 5th spot right there. But respondents think the president should pick Warsh, followed very closely by Waller and Bullard. Hassett drops to 4th on the who he should pick. 41% of respondents say the next Fed chair, I know you talk about this with David Zervos, the next Fed chair will conduct policy independently of the president. 37% say it will be in coordination, and 22%, maybe the most honest, are unsure. Meanwhile, 69% say Powell's speech will be neutral, with 14% saying it will be dovish and 14% even venturing it may not be about policy or the economy at all. I think that would be a disappointment to markets. Still, respondents see the Fed funds rate declining by 50 basis points this year, 25 in September and 25 in December, and 50 next year. This is despite calls for inflation in the survey to remain around 3% this year and next year as well. So the big question is, can Powell, how does Powell, if he does, make a case for a rate cut when the inflation rate is running a percentage point over target, and most importantly, forecast to remain there for most of this year and 2026. You want to be tuning in because coming up tomorrow, we have Kansas City Fed President Jeff Smith, and on Friday, Cleveland Fed President Beth Hammack, along with coverage of Fed Chair Powell's speech. Guys?
Hey, Steve, I'll give you unprecedented public pressure to lower rates by President Trump. I don't know if you know what went on behind the scenes. And I'm just looking at one. I didn't realize it was this crazy, but LBJ summoned Fed Chair William McChesney Martin to his Texas ranch and physically shoved him around the room repeatedly.
Yeah, we've talked about that.
Well, I know. Okay, so then it's not unprecedented. It's not as unprecedented as that. But publicly, there's no doubt, probably the most unprecedented. I just wanted you to add a word to unprecedented pressure, because we don't know what goes on behind the scenes.
Hang on, Joe. Let me edit my script. Hold on a second.
Edit your script for a squawk on the street. That's good.
Right. Or I could say unprecedented pressure in the last 20 or 30 years, right? Because
I don't know.
We don't know what
not happened. We don't know what GW did. We don't know what, or not GW, but HW did. He blamed Greenspan for him losing the election.
Joe, you know, it's interesting. You make an important point. And I think I do too, which is in the last 20 or 30 years, we have not had this kind of pressure. I'm not making an objective or subjective point. Is it right? Is it wrong? But certainly, and you're right publicly, and I'm pretty sure behind the scenes, we have not seen this kind of pressure on a Fed chair. And also, by the way, this kind of public, campaigning for the job among, Malpass is in the Journal today. We had Zervos on. Do you remember the days, Joe, when somebody was nominated for something and you'd call them up to see if they would talk to you and say, no, I can't talk to you until after the process is over? Again, this may be cool. I mean, I like the idea that Zervos came on and gave us 20 minutes of his thoughts this morning. I mean, I really think that we ought to call up the Treasury and tell Besant, don't bother interviewing them. We'll have them on Squawk Box every morning. That's a good way to do it. The next 11 days, Ann better get busy.
Yeah.
We've had them all. It's the Squawk Box interview you have to pass, not the Besant interview.
Either Trump presidency, how many times could you use the word unprecedented about how many different things? That's what I mean.
A lot.
I know.
And I'm not saying you make a wrong point, Joe.
Is anything precedented? No, probably. So
Joe, another point that's probably worth bringing up, and when we say unprecedented public pressure, is
it's crazy.
What all this?
It's unconventional. Yeah.
Unconventional. I think the question also is what all this does to the public reputation of the Federal Reserve. I think now you probably have half of the country hates the Fed. Half of the country thinks that most of their problems that they have economically are the fault of the Fed not cutting interest rates. I don't know if that's a good thing or a bad thing.
And you're saying it should be much higher. You're saying it should be much higher?
I don't think that's the case. I mean, it was interesting to hear Zervos, Joe, because Zervos made a great case for how well Powell has done. Right? He said they brought down inflation and didn't cause a recession. He also said that Powell...
He said, like Elarian, that 3, 2, what's the difference for inflation? Well, over 15 years, 3 is much worse than 2. I mean, I think
the important thing he also said, though, is that this is a consensual building.
Order filled.
Body. Right? You don't get to walk in and be a dictator no matter who you are.
He also said that Powell has kept inflation expectations under control. That's a huge job for the Fed, and they've done that successfully despite unprecedented public pressure from the president.
But then the flip side of that is if they really are under control, then you could cut, because that's where the risk is then. It's the labor market.
Fair enough. Yeah. Fair enough.
All right, Leisman. Well, you
see ya.
Thanks, Steve. Just, we're jealous with that shot behind us. It's really quite something.
So pretty, it doesn't look real.
CNBC's coverage of Jackson Hole continuing tomorrow and, of course, on Friday. And we're going to bring you highlights and reaction from Fed chairs, the Fed chair's address. Mr. Leisman in Jackson Hole.
Order filled.
Job, Brian Cornell is transitioning to executive chairman of Target at the end of the year, actually in February of next year. The current COO, Michael Fidelki, will take the top job. We're going to talk more about that in just a moment. We'll be right back.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build.
Order filled. Order
and
submitted.
Our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's
Order
time
submitted.
for Corient.
Investing. You buy low, sell high, jump on that trend, ride the wave. Stop. That's not how investing works. You're not a child playing a game. This is grown-up business. The real thing. You know wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
This is Buddy. I've never met a dog like him because there's never been a dog like him. Every dog is unique. That's why at the Farmer's Dog, we put your dog at the center of everything we do. With food that's freshly made to human-grade safety standards in personalized portions. It's packed with all the nutrients dogs need and delivered right to you. We just want to make it easier to take care of everybody's buddy.
When I started Walton Goggins Goggle Glasses, I needed a website. And GoDaddy Aero uses AI to make a beautiful website so fast it'll blow my customers' noggins while they're shopping for Goggins for their noggins.
When expectations are high, there's no room for uncertainty. To maximize impact, your logo needs to look great, on the right gear, and arrive on time. And that starts with 4imprint. To get your brand noticed, visit 4imprint.com.
4imprint, for certain. Empower.
Hey, I got her a little something.
A little something, Dad?
Oh, hi. Walt rolled his 401k accounts into an Empower IRA and planned for times like this. So I say, let a Gramps be a Gramps.
Okay, just promise me it doesn't make a lot of noise.
Be a little bad. Empower.
Never miss a moment.
U.S. businesses have borne most of the tariff costs so far because it takes time to negotiate lower import prices or to pass price increases along to consumers.
I think they will ultimately cut in September. The only thing that could derail it is if you got a surprise in the job report early September. I don't expect that.
One of the reasons why it's a great investment environment, there's a lot of news flow that allows you to take advantage of opportunities.
In terms of the interview process, we've announced 11 very strong candidates. I'm going to be meeting with them probably right before, right after Labor Day, and to start bringing down the list to present to President Trump.
That was Treasury Secretary Scott Bessent on Squawk Box yesterday discussing the search for the next Fed chair. Joining us right now to talk about that and what's actually happening in the economy right now is Harvard Kennedy School professor Jason Furman. He served as Council of Economic Advisors chairman under President Obama. And Manhattan Institute senior fellow Allison Schrager, thank you both for being here today. I don't even know where you want to jump in on this, but we've been talking about Jackson Hole. We've been talking about the issues that the FOMC is facing right now. We've been talking about the search for a new Fed president or Fed chairman. Where does this all come down right now? Who wants to jump in first? Who wants to say what this moment in time means?
Look, I mean, I'm worried. There's only one thing I'm looking for in a Fed chair. You know, it'd be nice if they understand the economy. It'd be nice if they know how to manage. But the only important thing to, but the only really important thing to me is that they think the Fed should be independent. And I worry that the main thing the administration is looking for in the candidate is the exact opposite of that.
Look, by the way, we just had David on. We asked the same question repeatedly. How independent does this person need to be? Can you be independent? He effectively dodged the question and basically didn't even dodge it. He said, no, it should be political.
He said it's never been independent. It depends on which side you're on.
I mean, if you think Joe Biden was sitting there rooting for the Fed to raise interest rates by 75 basis points after 75 basis points, that's not what we wanted the Fed doing.
He may have expressed some dissatisfaction with that.
And we're lucky the Fed did what it did. The Fed's certainly being independent right now. You know, the president would like them to lower interest rates. They're not. So to me, that's the one thing that matters, and it's sad that it's even become a debate and an open question.
It's been a long time of Fed bashing and Fed complaints. Maybe behind the scenes.
If presidents want to bash the Fed, that's fine with me. If they want to actually control it, that's when it becomes a problem.
You mean if this becomes the litmus test, are you going to do what I say? And you think that's the case. Allison, how about you?
I mean, I really am also very worried about Fed independence, but I'm sympathetic to the idea that maybe it's not as independent as we think. I mean, one reason we suspect that Jay Powell waited so long to increase rates when inflation returned is that he was waiting for his reappointment. So I think there's always this dance going on. What worries me even more than the pressure to cut short-term rates is that whoever's going to be Fed chair is going to be under a lot of pressure to do like serious financial repression, even on the longer end of the curve. And I think that's when things are going to get really gnarly and potentially like sort of bring us back to some sort of Japan situation.
Wow.
Japan meaning deflationary.
Yeah. Or not deflationary. Actually, the pressure to lower long-term rates might actually ultimately be inflationary because it just sort of suggests, you know, seigniorage. But I mean the low growth, very low interest rate sort of situation.
Jason, just where we stand right now, how much control does the Fed have? If the Fed actually were to cut the short end of rates, how much control do they have over the long end of things, which doesn't always go along with what the FOMC says anyway. It hasn't, you know, over the last couple of years.
I mean, look, they delivered that cut in September of 2024, and mortgage rates went up.
Yeah, right.
You know, the problem we have right now is the big thing driving the economy is the tariffs, the immigration reduction, and then what's going on with companies like OpenAI that you were talking to before. And with all of that, that's driving interest rates up, that's driving inflation up, that's giving us a situation that the central bank can't get to a good answer. They can get to less bad answers, but the only good answer would be to change some of those policies.
Okay, David Zervos said that he thinks the Fed has gotten to a neutral balance sheet because it's down to just over $6 trillion from over $9 trillion. He thinks that inflation is okay, even if it's at 3%, not beyond that, and that he thinks real employment is 3.5%. Does that sound like if it's up to snuff in terms of how you see the economy, Allison?
Yeah, I think it's really hard to justify a rate cut, particularly with what's happening with the stock market right now. And it said that inflation is still above target and unemployment isn't that low. So I think as well, when I'm getting concerned again that all these Fed nominees, potential nominees, are talking a lot about the balance sheet and the fact that a large balance sheet is desirable. I mean, I think that's debatable, but that to me is where I think there's going to be a lot of scope to start doing more sort of yield curve control, which is I think where things get really dangerous because, you know, you can always sort of argue about what the short-term rate is, but when we really start thinking about yield curve control, we're going into a really different territory that I think really can erode independence.
Jason, why do you think Powell waited so long to do? You're giving Biden credit for not complaining about the rate increase. Why did it take so long? I mean, if I were Biden, I would have been begging him to raise rates so that I didn't, you know, get 40-year highs in inflation.
Oh, he messed it up.
But not, you know, that's not from any political pressure.
I don't think that was for political pressure.
Well,
but
he wanted to keep rates low. He wanted to keep rates low for Biden's economy.
He thought the inflation would be transitory. Okay. I thought he was wrong in real time when he gave that Jackson Hole address in 2021. It was like a brief.
But we don't know if there was pressure to keep rates low.
What?
We don't know if there was pressure.
You know, but what I give him a lot of credit for is when he recognized his error, he corrected it more quickly than anyone called for.
Jason,
no one thought they could raise rates as much as they did, and he did. And he had that courage.
I have a totally different question for you.
Okay.
No, I remember Joe would give you a hard time when you were in the Obama administration about Solyndra. I don't know if you remember that. You remember this. So I want to know what you think of the industrial policy. Some of the news we're learning even this morning that the administration's thinking of taking equity stakes in all of these companies, chip companies that have taken money as part of the CHIPS Act.
Yeah, I mean, this administration's enthusiasm for involving itself in American businesses, who their CEOs should be.
But the strange bedfellows is, should you be saying, rah, 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 this is fabulous, we used to do this, and this is great? Or do you say the lesson of your own experience was that Joe was right the whole time?
He won't say that.
Joe is always right.
Right.
Joe is always right.
I'm always on the right.
I think one should be very, very uncomfortable about industrial policy.
But were you uncomfortable then? That's what he would say. I'm channeling him.
We summed it up.
I thought that was small amounts of money for something highly speculative.
Order
when you're talking
filled.
about a large amount of money for something very established.
Order submitted.
I think you have to be more nervous about it.
We were kidding off camera. I said, I like government policy when it's a Republican policy, or government industrial policy when it's Republican. You like it when it's Democrat.
That's not true. I don't like it generally.
But I'm just summing it up, sort of, because we wear different.
I mean, I sort of like markets, and
that's
roughly believe in
most
that.
Democrats don't, so that's good.
Order
for
filled.
So, Allison,
you're
not getting enough.
You want to weigh in on this?
No, I mean, this is why I think you have to be careful. I'm an equal opportunity hater of industrial policy. I hate it when both of them do it. And you knew this was coming with the Biden administration when they started going to chip manufacturing. I think, like, sort of an explicit government stake is sort of, you flirt with that when you start sort of giving subsidies and start demanding, you know, childcare and all these other sorts of benefits.
But my question is what I said to the CFO of OpenAI is, there will be a day, I imagine, where the president could call up an OpenAI and say, look, we're subsidizing all the chips that you're operating on. We need a stake in you now, and you're just going to you're going to fork it over. I mean, that's how that's the slippery slope of all of this.
Like the Godfather to the baker. It's like, there will come a time.
He is doing that with my university right now.
Well, your university deserves some of that.
Oh, boy. Allison.
I can't wait to see their faces when they come out.
What seems to be the problem, soldier?
The belly's full of Greeks.
Sneaky cowards.
Innovation changes everything.
Send it back!
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at invest.
Brandon Coley, Jablonski Auto Body, LLC.
What'd she call her?
Order filled.
We actually sold the twins naming rights.
You know, like stadiums do. Very lucrative.
Oasis Breeze Tan and Spa.
The right money moves aren't as absurd as you think.
Doors bring us together. A dedicated Fidelity advisor can help you open those doors.
Oh, can you sign this for me quickly?
She's so ready to take over.
With a comprehensive plan to help grow and protect your wealth for generations. Doors were meant to be opened.
At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise. Explore PGIM ETFs today.
Breaking earnings news. Target, Lowe's, Walmart, Ross. Market reaction. Expert analysis. Strategies for your portfolio. This week on CNBC and streaming on CNBC+.
Online security is, like, as a mom, one of the very highest priorities. There's so many things that we have to watch out for. With Spectrum, I don't have to worry about it. I know when my kids are on their devices, they are protected because I'm not always sitting right next to them. The reliability, the connectivity, the security, everything is kind of all in one. That absolutely makes it worth it to me. And that's just a huge relief.
To the end zone.
after 11 plus years as CEO, Brian Cornell was going to transition now to executive chairman at the end of the fiscal year at Target, and current COO, former CFO, and 20-year Target veteran Michael Fidelki is going to take the top job. Joining us now with his reaction to this news and the company's results, Michael Lasser, UBS equity research analyst. And just about across the board, Michael, we have had people saying that the earnings were kind of a non-event, and the disappointment reflected in the trading in the shares is because they didn't go outside the company for a replacement for the CEO, for Brian Cornell. Is that your view?
Morning, Joe. That is without question the right view. The market was hoping for an agent of change, someone come in, make some significant moves, and improve the trajectory of the business. Now they're going with an internal candidate, and the market is saying it's going to be more of the same. What we're offering, though, is that the jury is still out. There is some improvement that the business is showing. There's a lot of potential at Target. The stock has probably limited downside given where it's going to open this morning. It does lack a near-term catalyst, without a doubt. And what we're suggesting is that the new leader deserves a chance before the market defaults to a resounding conclusion.
How do you decide whether someone who knows a company inside out and knows where all the pitfalls are and all the shortcomings are, why is it automatically better to assume that someone who has never even worked at Target would do a better job? Is it that insular and the groupthink is responsible for the underperformance of Target over the last 3 years or longer?
Yeah, it's an awesome question, Joe. And I would make a couple points here. Number one, how do you decide? I think what the market is saying is that it's just simply not happy with the performance that the Target has been able to achieve given its existing structure, leadership, and approach over the last few years, and was hoping for some change. You are absolutely right. Implicit in your question is that this was the path of least resistance, and maybe that is also some upside as a result of not shaking the cart at this point. But retail is really tough, and what's happening is Target is essentially standing still. Its competitors are vastly moving ahead, and that performance gap is becoming very evident in its in the way that it's underperforming. So these are the reasons why an outsider was needed.
Very good. And I'm sorry to cut you off. We've got to turn it over to the next show. Michael Lasser, thanks. Make sure you join us. Squawk on the Street's up right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli, David Faber here at Post 9 of the New York Stock Exchange. NASDAQ futures are red again as we keep our eye on this wobble in tech coming off the worst day for high beta momentum since April. Retail earnings are busy. Target, TJX, and Lowe's. Jackson Hole begins. A roadmap, though, begins with the Trump administration reportedly eyeing stakes in other chip companies that received funds from the CHIPS Act. We'll talk about what's at stake for them.
Plus, Target shares are tumbling after a sales fall again. The struggling retailer also announces who will be its new CEO. And of course, there is that slide in some of the big tech names, chips, momentum in particular, some of the biggest gainers turning into big losers, even some of those crypto-backed companies. We're going to talk about all of that and that rotation with who better than Mike Santoli.
Speaking of which, let's begin with the U.S. government reportedly considering taking stakes in other chip makers besides Intel. We talked to the Commerce Secretary about this yesterday. A lot of ongoing debate about what it means when the government starts literally picking stocks.
Looks like it's adding to some pressure on things like Micron before the open. Just this what-if question of, if you're going to start to claim equity stakes just for funds that were appropriated by Congress in the last presidential administration. It's just hard to know how to draw the lines. It's also hard to know how to separate out what's going on with some of the chip stocks with this broader reset in the market, the rethink of AI momentum and things like that. But it is worth asking the question. First of all, Samsung and Taiwan Semi, they're not U.S. companies. We don't know exactly how this might work. But it's worth keeping in mind. I mean, also, I don't know, I just looked on the Department of Energy website. There's $97 billion allocated as part of the Infrastructure and Inflation Reduction Act. It's still out there for companies to build infrastructure projects in energy. Are we taking a piece of those companies? You know, it really does
we're not doing that anymore because it's wind and solar, right?
You're not doing a lot of it, but it's still on the website. That's why I looked today.
Okay.
And so in theory, there are these programs that you can subscribe to. But you can go down to, you know, Medicaid spends a lot of money keeping hospitals afloat. You know, I mean, you get to an absurd point of saying when Congress commits money for a stated public purpose and companies are the ones executing on that spending, does it give the government a right to own a piece of the equity?
And the answer would have been
no. Right. Exactly. And so, but that doesn't seem to be where we're settling.
The answer still might be no.
Yeah.
I mean, in the case of Intel, of course, they need money.
Yeah.
I mean, that's what it really comes back to in terms of just specific to Intel and the conversation.
Well, they need money.
What they need are customers.
Well, no. First, they need money.
They do need money.
Because they need money to build whatever it is that the customers may actually ultimately want.
Yes.
And having the CHIPS Act money, which is free, so to speak, no strings attached, become equity is not helpful to them because it's dilutive.
That's right.
But I can tell you as well, it's not just SoftBank. They've been talking to other large investors as well about an equity infusion, obviously at a discounted price. So we'll see whether they are successful in raising more equity at Intel, apart and aside from what may be the conversion of the government stake. And we did speak, obviously, yesterday to Howard Lutnick, the Commerce Secretary, about the specifics of it. And you should take a listen because it is what has led to at least clarity around what the U.S. government is trying to achieve here, perhaps, and the idea that it might not just be confined to Intel. Mr. Secretary, how do you view, then, the CHIPS Act funds that have yet to be committed but have been promised, and the idea that that might be then converted to an equity stake? Is that how we should view it, that ultimately that's what you're talking to Intel about right now?
Yes. I mean, the president figures out that America should get the benefit of the bargain. I mean, that is exactly Donald Trump's perspective, which is, why are we giving a company worth $100 billion this kind of money? What is in it for the American taxpayer? And the answer Donald Trump has is, we should get an equity stake for our money. So we'll deliver the money, which was already committed under the Biden administration. We'll get equity in return for it, get a good return for the American taxpayer, instead of just giving grants away.
Do you get governance here? By the way, once you're in for 10%, do you have to go in for even more?
No. Come on.
No, what?
Come on, stop that stuff. It's not governance, right? We're just converting what was a grant under Biden into equity for the Trump administration.
I get that.
I get
that. I just asked if you're going to get governance. You're going to own 10% of the company. You don't. Why wouldn't you want some
non-voting?
Okay.
No, stop. Don't overdo it.
Sure where that leaves us.
No, I don't either. Well, also, Intel doesn't have $100 billion. It has a $100 billion market cap.
It has a $100 billion market cap.
It has negative free cash flow, and as you say,
without a doubt. And it needs more. And I'm telling you something that I know, having spoken to some other investors who at least have been considering such equity investments at discounts. It needs more. It needs more money. And it's not going to be getting it from the government, obviously. It wouldn't seem, in terms of new money, at least, based on what we heard from the Commerce Secretary yesterday.
Right. Meantime, and we assembled this with a conversation with the Commerce Secretary, golden shares in X, revenue kickbacks with NVIDIA and AMD, calling for the firing of a CEO at Intel along with this equity stake, firing the heads of data collection bureaus. It's all adding up to what some are calling a Chinese model.
Right. Well, the rare earths also, don't forget. That was actually one of the first with the $400 million investment there. But again, something that is very much a national security concern for the U.S. and therefore the making sure that you have a champion, so to speak, and somebody who's going to be able to deliver on that rare earth promise and domestically for our military and the like.
It's tough to see this as an overlay in the market or to identify it. I mean, we know it's there. Everyone's talking about it. It creates a certain amount of flux and uncertainty around how you should think about companies and people's claims on profits. But I don't think in the here and now anybody is saying, well, you know, we got to apply a discount to this category of companies because we simply don't know if the government is going to kind of muscle you aside and dilute you out or anything like that. But it is, you know, it is keeping everybody off balance more than they thought they probably would be at this point.
I mean, the guys on Squawk this morning were asking Sarah Fryer, the CFO of OpenAI, whether they could imagine a point at which the U.S. government came and asked them for an equity stake. Now, she had no answer. I would expect that to be the case, but that's kind of where we are.
Yeah, and you also wonder if it came down to it, if other shareholders would try to sue, or I mean, how it would all play out.
I don't have any
Or if it's just going to be kind of, maybe it'll be a limited case and we'll move on.
Yeah.
Right. That said, markets at 22 times 12-month forward, one of the highest valuations since 1990.
It's back up to the, you know, outside of the pandemic, it's pretty much at the highs. And I think that's the backdrop for what we're seeing in terms of this backing away of NASDAQ 100 and high momentum and high beta stocks. So that's the atmospheric conditions that we encountered coming into this week.
But it was a big rotation yesterday.
It has been a very big rotation.
A lot of people's attention out of AI, as you say, the momentum tech names, AMD, but even FIG, you know, obviously great Figma, the great IPO recently. Vertiv is back, and then AppLovin. If it's momentum tech, it was down. But Mike, interestingly, I'm not sure where the rotation go because there were not a lot of short squeezes in names you might have expected with that kind of a move.
This is pressure on the long side. It went to year-to-date laggards. By the way, in the S&P 500 yesterday, there were like 350 stocks up and 150 down. And everyone was like, oh, no, what's going on? The NASDAQ's down 1% or 1.5%. I'll tell you, year-to-date losers that were up at least 3% this week, which is 2 days, Centene, Deckers Outdoor, Enphase Energy, Molina Healthcare, Fair Isaac. So it's basically mechanically scooping up the stuff that hasn't been there. And so this is one of those kind of vibrations within the factor rotation world. We'll definitely talk more about it, but it seems as if it's another bout. We went through this January, February. We went through this last July in 2024 as well. We'll see how it settles.
Yeah, we'll get to news on Meta and certainly watching Palantir last few days. There's Target this morning announcing it has chosen its next leader in the wake of the retailer's sluggish sales and stock price. COO and CEO in February of next year. Our Sarah Eisen's here at Post 9 with more on the change at the top, on comps, on their reiteration of full-year guidance.
No question, Fidelki's going to have a tough job coming in February 1. He's been at the company since 2003, started as an intern, has worked in merchandising as the CFO, most recently the COO. I don't think that it's surprising that Cornell is leaving now. This was expected. It might be surprising that they went to an insider, a longtime company insider, at a time where the company is facing challenges. So I had a chance to speak with both Michael Fidelki, incoming CEO, and Brian Cornell, outgoing CEO, who will take the role of executive chairman. On this current quarter, look, comps down almost 2%. That was actually better than expected. But what Cornell told me about that, 6 categories we saw improvement. Our comps did improve, and we beat consensus, but we are not where we want to be on a long-term basis. As far as the new CEO pick, I asked why they went with an insider, not an outsider. Cornell said the board, this has been a multi-year process, and they did evaluate external candidates, but guys, they ultimately decided better have someone who knows what makes Target special, to bring Target back to the heyday of when it was outgrowing the rest of retail and big box. Obviously, that's been a challenge in the last few years. Just as far as Fidelki, what he said is his challenge number one and his job number one, it's an urgent focus on growth. He told me his number one focus is getting us back to growth. I draw on 20 years of knowing what makes Target unique. At our core, we are a style and design-led company. And then I asked him how he's going to do that. He said, first, we're going to reclaim merchandising. We have big plans for changes in home, for instance, which has been a category that's been weak for them. Second, we need to focus on the customer experience, make sure it's better. And the third is the how. We will use technology more aggressively. Guys, we spent a lot of the conversation talking about sort of what's gone wrong and what Target's special sauces, how they get back, because it's obviously a very competitive retail environment. Walmart's taken a lot of share. What makes Target unique? And I think my takeaway from Fidelki is It's the Target. It's the, we have sort of on-trend, design-led products at good values. That's what made people like Target. Maybe they got away from that in certain categories post-pandemic, and they've really struggled, as evidenced by the recent results.
I guess the question is, did a set of competitors kind of take that from them that they can reclaim, or is that just what they're kind of grasping for the moment when they seem to have it figured out?
Well, look, no question, Walmart has grown share, and that includes in the discretionary category as well. Though, if you look at what went wrong over the last, just step back at Target over the last few years, it was a series of things, and they were both strategic missteps and also consumer changes. It started coming out of COVID. Target boomed during COVID. Yeah. Coming out, they were on the wrong side of the inventory equation, where they just had too much discretionary home goods and products and air fryers that nobody wanted anymore. So that was an inventory problem. And then they had some pressure with the LGBT. They had some, transgender bathing suits, and then there was this big woke backlash, and there's still questions, and they rolled back some of their DEI initiatives. It's unclear. I talked to both of the executives about whether that's still having an impact. They don't quantify it. They don't really talk about it in that way. And then just missing some of the key design trends on some of their core categories, which make them unique. Apparel, for instance, and home, and that's what they need to figure out. And at the same time, Walmart, Amazon, Costco, all killing it at a time where consumers were looking for value and they were putting needs before wants. Target was always a bigger play on discretionary than on staples. So for all of these reasons, there was also the theft and the shrink problem.
Which they actually did quantify at one point.
Yes, well, so Brian told me, actually, there's good progress on that. He said, we're getting close to pre-pandemic levels of shrink. That's good news. They don't want to lock up all their products, he said, but that clearly is something they've had to do, and they've worked with the authorities, so there's progress there. And then on the growth plan, Fidelity plans to open more stores, 300 stores in the coming years. And I thought this was interesting. They're going to skew toward, he told me, bigger box stores. And our batting average on stores we're opening is quite good. So look, they're optimistic that they have someone who on day one can be prepared to pick up the baton on the turnaround plan. Looks like Wall Street maybe was looking for a fresher idea, or is disappointed by the lower traffic, lower tickets, and lower sales again.
Right. Comps down 1.9. We were looking for down 3. Fidelity was at one point a summer intern at Target when he was out of school. And we forget that Cornell was, even it's been 11 years, but as an outsider, that wasn't very common at Target at the time.
No, he was brought in. He was from PepsiCo. And remember, his number one focus was to actually beef up the food and staples and grocery part of the business. He's also been an executive at other companies as well, but they're drawing from insiders, and I was told they looked at outsiders too. And ultimately, it's about staying close to the consumer and knowing what makes Target great. And instead of maybe having a 6-month process where a new CEO would have to come in and understand the whole business, they have someone who's been there and who knows and has a sense of urgency.
Seen a bit, Sarah. A good color on Target. Big story this morning. When we come back, with Google set to launch its new Pixel lineup today, I'll look at why AI has not yet killed the smartphone. Take a look at the pre-market. Bunch of other retail names to get to, including Lowe's, TJX, Estee Lauder. Got some downgrades of Gap and Urban as Squawk on the Street continues.
Oh, so you corporate types think you're rock stars?
That's as ridiculous as us being corporate types. Let's begin.
Rockstar move using Workday to handle all our AI agents.
Well, watch me handle my agent, Gary. Bubbly water, no bubbles.
So what'd you do this weekend?
The huge.
Shout out to Carmen for using Workday to manage our people and AI agents.
What are we doing?
Just clap.
Carmen!
This is Mia. She dreams of taking her boutique swimwear brand nationwide. With her business growing so fast, she needs fast funding to keep making waves. That's why Mia has U.S. Bank Business Essentials, a combination of checking and card payment processing.
That one.
Giving her access to funds typically in 24 hours.
Trade days end of the month, so you're good. Good morning, guys.
When I started jogging goggle glasses, I had no idea what I was doing. But GoDaddy Aero does, using AI to build a logo, website, and social content. So I can let the world know. See, goggles ain't gogging. They don't belong.
Yeah, all the firm is just. I don't think they're making much money
doors connect us to what's important. A dedicated Fidelity advisor can help you open those doors. Backed by a team of specialists, they'll help you build a personalized investment strategy. Doors were meant to be open.
My name is Doc Brown. The best stocks in the market is very simple. These are stocks with good fundamentals.
See what happened to Gambit? He's not been on.
Technically, they're in the process of rising.
I don't know. Ever since yesterday, he hasn't come on.
For exclusive access to Josh Brown's best stocks in the market at cnbc.com/beststocks.
For the best tailgates in Texas, we need the highest quality beef and HEB certified meat cutters like me.
And meat. We hand cut and grind fresh meat.
I was sad that I have to hedge this ETF and then wait 5 days to get it funded again. I just got those 3 funded yesterday too. Yeah, I just got it yesterday. And I had 180. No, I had $300 profit on it. Woke up and it's all blown. I was like, fuck. I'm thinking so. I did hit flat and all on the Apex copier, but I guess it didn't do anything. Oh well. Oh yeah. Your Tradeify or your Trade A? Ah yeah. You almost passed it already. Nice.
Pixel event for Google where they show their new phone, their new earbuds, and their new smartwatches.
I'm gonna get mine, but then I'm gonna save for CPI, so 9/11 CPI.
Obviously, Google has its Gemini assistant. We'll be seeing what other extra features they can add on top of that to make this an enticing device. But it's been a really tough road for AI hardware.
Yeah, I was thinking, should I do the $30 or the $50? Because the 150, it's only $20 more, but you get a better buffer.
AI PCs from Microsoft, Apple's failure to get Apple Intelligence off the ground. We really haven't seen anything revolutionary on the AI hardware front. We've seen some modest successes. I'll point to Meta's Ray-Ban glasses. Those are the ones you put it, they have the camera built in, and you can talk to it, use the Meta AI assistant.
I don't know what this guy's complaining about.
Artificial intelligence that has this device you wear that you can always listen to. None of those have taken off in a significant way, but there is some momentum around there. And I also point to what Apple CEO Tim Cook recently said about AI.
I'm thinking so too. I think that's going to be it after that.
Hinted that the phone is still going to be central to a lot of what we do. We hear a lot about what Johnny Ive is working on over at OpenAI and so forth. Cook's belief, though, it's going to be more like these accessories that we've been seeing as opposed to something that replaces the phone. And then when it comes to the phone itself, really making that assistant more personal and things like that. So we'll see what kind of flavor Google can put on that today, guys.
They're working on it. And then they'll check your trade too. If you're like a really good trader and they can see it on your logs, I'll just send you live so you can't milk them.
Plans to produce U.S.-bound phones in India, and I guess the question now is whether or not they got the all clear from the administration on that.
It certainly seems like it. I mean, we saw that extraordinary event in the Oval Office, Carl, just a couple weeks ago, and the president kind of brushed off questions about
Mila? I gotta do something with it. I'll be back.
Because of giving that trophy to the president and also offering that $600 billion in investment in the United States over the next few years, Tim Cook really just created a détente between himself and the president. And it seems like India is really no longer an issue. So it's all green for them to go in there and accelerate that production to get around the worst of the tariffs.
Steve Kovac on Apple, and of course Google. More news on that event later on today. Take a look at the pre-market here as we continue to wrestle with these last couple of weeks of August and some of the rotation that appears to be budding. More Squawk on the Street in just a moment.
See this? Your company started in the kitchen. Now it has 3. Your team of 5 grew to an army of 500. And that's your logo right there in marble.
That's big.
grow your business from big to bigger, you need an advisor built for the
Oh, thank you. I think in like a week or two, I can apply to monetize with ads. Yeah, I think I need 600 more hours. I'll go quick because the analytics is like a week behind. I already got 4.2 thousand hours in, so but on the stats it shows 3,600. But that's like a week and a half behind.
Or GA. GA can be unpredictable and progress rapidly, causing irreversible vision loss. But with eye survey, you can.
Yeah.
Ask your doctor about eye survey.
I just want to know how much you can actually make from YouTube ads, because nobody want to tell me. Like all those trader streamers, they won't let me know. But once I get it, I'm gonna post it up so everybody can know how much you can make, so they can, you know, try doing it themselves.
Do not drive or use machinery until vision has recovered after an eye injection or exam. Eye survey has proven to slow GA progression, which may help preserve.
Bot's still short, so I still think a short is good. Even on a 15 minutes, a short looks good. So I'm still holding 2 shorts.
At the Farmer's Dog, our fresh food plants help old dogs feel young again.
What's up, Gambit? You just woke up? Dude, I blew all my shit, Gambit. The copier. I know, I woke up, all my shit was blown. Check the P&L, the P&L channel. Yeah, it's a copier. I deleted the copier now. Yeah, I don't know. The ETF and then the funding ticks was on the copier, but TPT wasn't. So I'm not sure what happened on that unless I left an open order. Yeah. I was all happy looking at YouTube. Like, oh, I got a new members. Oh, and then what? And check my Ninja Trade. It's like, oh shit, everything's gone. No, I'm actually negative on that one, but it wasn't blown. That wasn't attached to the copier, so the one that's blown is the 50K that I was working on. I was like 800 from passing, so that blew. That is it me? No, you sure it's me? Oh, I think it's poker thing. I think he's on my YouTube, so I think he's hearing it. No, you're good. Oh, are you gonna get the fast track Gambit? It's $26. We can YOLO either tomorrow or Friday. I see which data is better for YOLOs. I use $26 only. Yeah, Lynn just got the payout last night on it, $700 from a $26. Lynn. Yeah, everybody's getting payouts on it except for me.
Thanks for walking us through the plan.
We got 4 minutes. I need to get out of these shorts in case of pump.
personalized investment strategy. Doors were meant to be open.
We just signed the lease on our third shop. My assistant went to customink.com to get new uniforms with all the locations. He found great products, uploaded new art, and had boxes sent to all the shops. Custom Ink makes it so easy. Get started today at customink.com.
No, he's been MIA, dude. I didn't want to message him. I don't know what's going on.
Just around the corner. 25 years of yesterday's. Nuveen knows your ultimate stakeholder is tomorrow. Nuveen, invest like the future is watching.
Hey, good morning, Isis.
The opening bell is brought to you by Nuveen. Invest like the future is watching.
I think FOMC minutes today at 2. I think. Pretty sure it is. I don't think you can YOLO those. It's not going to do anything. Damn, look at that pump. What's up, man?
Issuing this is about the valuation and then starting to weaken from there. That's part of it, and it's coming again as part of this general gut check we're getting in terms of the stocks with the most air under them that were driven by the highest flow of retail trader and other tactical trader money that would qualify as Palantir. I've been showing for months how Palantir shares and Robinhood have been moving in sync. It's just kind of manifestations of retail trader energy and enthusiasm. So we all
Trump's tweeting again.
It's kind of the trigger points that go from there, which are other stocks with a lot of air under them, other stocks without valuation support. You have high concentration. Obviously, we do that coming in. And so when the market tries to relieve these extremes, this is how it happens violently sometimes. And so as the momentum basket gets taken down, I do think
1 minute.
Organic to a degree, wondering about again the efficacy of their
I need to cancel this elite funding so I don't get charged.
Yeah, to make up the slot. I want to come back to something before we get to the open. You mentioned retail.
I think it's gonna pump.
I mean, backing off and August. Just said that real quick.
Hey, what's up, man?
That's got to be part of this second part. Yeah. I mean, and like the crypto treasury stuff. Also,
I'm stuck on a short on my TPT is almost blown. No, the old one, the one that was down already. So I'm trying to size in more. I'm at the 2 MNQ. I usually just play one until I get it back over 1,000. Yeah, 20. I only have 2. They're both 25K. Damn. Did not want the bot to go long. Bot's still short, so it's still good. There we go. Get me out of here, baby. Hell yeah. I'm out. I'm not messing again. Woo. Now, let me log up this tick. Got enough money. I locked both out. It's good. 600. Dang, what a drop. Let's go, bot.
This rotation, throwing in CoreWeave's earnings. And we got some filings about the share sales, Cisco's guidance, AMAT's guidance, and then the Palantir and the Medicals that you already mentioned. All of it.
No, I'm gonna wait. Hopefully it gets 420 again.
I think starting to see people get a little bit nervous about just the GDP intensity of data center CapEx. And this idea that, look, we're all in on this one trade. I also was looking at the flows into the...
Are you close to passing Gambit on your TPT? Oh, it's on the second day. Yeah. See, we're bot shorted at 396. So I need to go to 415 at least. Dang, I dropped. Nice drop. Nice drop. What's up? What's up, buddy? I'm winning. I didn't. I did not. I actually hit flatten all and all that before I went to bed, but something happened. I don't know. It's okay. It's $26 each. Yeah, I did, but I did delete the Apex copier. It's gone now. I'm not fucking with that anymore. No more copy trading. I'm gonna try to Tradeovate built-in copier because that might be better. And it doesn't copy across other firms. So if I blow, I just blow one firm only instead of 2-3 different firms. No, yeah, I think I'll try that. That's a good short on the butt. Yeah. Come on, give me enough pumps I can short.
You mentioned data center construction. I don't know if we have the chart built, but Goldman has an incredible chart. Construction on data centers is poised to
Don't go too heavy, end up blowing it.
Construction having been only 20% as large as offices less than 3 years ago. Now, part of that is came out of COVID. You don't need a bunch of new buildings. There's a lot, but
Damn, August almost over, dude. Your trip is in like a week. Yeah.
It is a continued concern. Of course, as we've mentioned so many times, we measure data center
Nice.
how much power it consumes. That is the actual.
I'm trying to wait for like 415, 420 again. I did make pretty good on that short earlier.
just keep going. Most naive question about all of this is if power and the cost of power is the main constraint, why aren't the smartest minds working on engineering around the constraint? Right? You heard about low power chips for a while. I mean, that's been a huge movement. Now, I know it's too dumb because you have to make all these different actual queries to execute anything. The chips are certainly becoming more efficient, and it's more lower power data. Then you just get more of them. Yeah. So you don't really ultimately need. You still want more power. Just all right, we'll just have more chips. So again, it's controlling things like water, which we don't really talk about now. You heard Sarah Fry, the CFO of OpenAI, on Squawk Box this morning. Compute. That's all she's talking about. We need it. We're short it. We need more. We need as much.
What's up? Well, you pass it, you only have 2 days to pay, I think. I think. I'm pretty sure the link goes away after 2 days just to pay. I think you have to open a ticket for them to give you the link again.
Electric bills are double CPI, right? So that's a question for the future. Yeah, for consumers and anybody.
Ooh, I'm only down $92 now. I was down with 200. I can come back on this TPT. I need a pump though.
The average stock has been kind of meh, relative to anything AI powered, and that's kind of how the economy's operating. Right? We don't really know ex-AI what the economy's doing. I mean, that money would be doing something in the economy, but not this.
Guys, back to retail for a moment. We talked a bit about Target. We spoke a lot. We heard from Sarah on Target. I do want to come to the name I like to discuss because they don't talk about it a lot, that being the management of TJX, which, by the way, is 3 times the market cap. Never get tired of pointing that one out. Oh, right, I'm over here. That camera's off duty today, apparently. TJX is a $150 billion market cap versus Target at roughly 50 or so. So 3 times that, and it's up a lot. Why? Well, Q2 consolidated comp store sales up 4%.
Now I'm gonna try one more short. It goes up to 85.
Orders submitted.
This is their press release above the company.
and we're talking about diluted earnings per share of $1.10. That was up 15% again, according to the company.
I tried in 3 minutes.
Above their plan. We always like to show that market cap comparison because we don't speak about TJX.
Are you long?
We do some major retailers, but there is no doubt.
I was shorting all night last night.
So it trades at like a 32 forward PE. It trades at like 2.5 times sales. So with Target's revaluation down, it's like under 0.5 times sales. And, you know, Walmart's well above 1. So that to me is the market saying, does this have a sustainable growth model?
Look, Gambit, the condo's full. Well, yeah, I just posted a screenshot for you down there.
37 of the last 38 quarters, TJX
Almost. Yeah, they usually book at the end, but the revenue was like half what it was a couple months ago. Yeah, because kids are back in school. They usually put rent the stuff out, or not American. It's like people out of the United States. They stop traveling to the U.S. at least.
The number one S&P laggard, TJX is the
What's up, bro?
S&P gainer.
Oh, I'm short. Let's go, and I'm out.
We were looking for 1.3. They do beat a little bit of an M&A in there as well as they buy foundation building materials for about 8.8. Yes. Did you see that? That 8.8 billion. Yeah, but the 2021.
Order submitted.
I don't know if it's like an 8X or something.
I saw your payout. That payout, you put it quick in ETF. It worked. You know, those guys are from Seattle, right? So the time zone is the same as yours, and when you posted, those guys were still up. Yeah.
Order submitted.
I have a meeting with them later today at 1. Good shit, man. You have any more Apex eval you're working on, or that's it? those precious evals.
We know that furniture has been at the center of some definitely. Yeah, there's a lot of these clues out there that you have direct tariff impact, whether it goes through prices or not.
I need 87 against I can short, but that's a good drop.
They're almost assuming there's going to be some tariff impact, or if they didn't front load it, they're just going to wait and see how it does shake out. And yeah, again,
See, Bob got 100 points short last night, and then I got 80 points long, and I got 30 points short.
Yeah, both get downgraded over at Citi today to neutral. Citi says they're taking a more cautious view on specialty retail in general in the second half. So we'll keep an eye on what that means. Kroger as well, with the downgrade over at JPM to neutral, saying that the multiple getting tougher to justify. Once they bring in a new CEO, you're likely to see a new investment cycle. And it's in that theme of the consumer is maybe better than
Dang, that drop.
But it's not as if there's kind of enough.
Gambit, 15 minutes got more room for the downside, so don't try to long, okay? Good shit, damn, you passed that quick. Yeah, a lot of good sales lately. I gotta go buy some funding ticks tomorrow.
You just don't have the kind of unaffected controlled experiment.
Dang, that drop. No, don't go long yet, doggy.
But yeah, there it is. So more than half of the company's market cap has gone away during that period, particularly.
Yeah, do not try to long.
Fourth quarter sales down 13%. EPS was 9 cents a share, but that matched estimates. Gross margins actually did.
We're about to get low day coming up. Yeah, do not long.
72% despite that decline in sales. And there is a sense here that maybe the turnaround, so to speak, is starting to take place.
Yeah, we're gonna hit it. Next level, will be $299, and after that, $243 on NQ. If it pumps, I'll short again, but I'm not gonna long.
See, but maybe the market's starting to think, or investors starting to think, but we're certainly behind it.
Yes, the earnings, I mean, they've really been rebased, and so whether maybe now you do have that curling higher again, because it's very much a expensive stock on very depressed earnings, so you know the stock's going to move before the valuation starts to look good in these cases usually.
Right. How about adding AT&T to the US 1 list?
Yeah.
That name is close to, I think, 5-year highs.
Yeah.
Yeah, I mean, up again today, another percent. We've talked a lot, obviously, about the company over the last couple of years and their strategy, which is being rewarded by shareholders. What, almost 30% to your point, up year to date, 28.5%. AT&T's market cap now exceeds that of Verizon.
Yeah.
Which is always notable.
Actually, let me ask him. I think I just saw him in the chat at 2 a.m.
AT&T's well below 4. So it's not really the yield story again. Actually, you guys see the Wall Street Journal story about Ford's dividend?
Yes.
John DeWild, kind of good on the corporate accounting type stuff.
Just essentially arguing that it would be tough to maintain.
It's tough to maintain. They kind of target their payout based on this adjusted free cash flow measure. Obviously, the Ford family is still a big recipient of the dividends. There seems a lot of reluctance, although they've suspended it in times of economic stress, like the pandemic and such. They want to maintain it, but it's a 5% plus dividend. It's only about maybe 20 S&P stocks that are in that. By the way, UPS is like above 7% dividend yield right now. It just it's been pounded so hard, so cheap. They've not touched it. So it's sort of the if you really want to bottom fish and feel like it's a marker of long-term deep value, it's like names like UPS and Pfizer.
Yeah, Dow is probably the most high-profile dividend cut that we've had in the last couple of weeks.
Yeah.
Chemical. MCD might be worth a mention as there are reports that they are going to be cutting the cost of their combo meals. They finally were able to convince franchisees to go along with this new pricing model. I think it's the Journal's reporting is that some of these Big Mac combo meals have reached $8
Morning.
in some areas of the country. Meanwhile, you have things like Chili's comping well into double digits, so that you can see where McDonald's would feel some pressure there.
Yeah, Chili's comping that way, and then you see the value that's advertised for the sit-down casual restaurants. Like
Ooh, new low day. Here we go. I hope you didn't long, dude. Oh no, I wasn't talking to you. I know I'm talking to Gambit.
Secretary Lutnick about sort of his view on rail consolidation yesterday, and then it was kind of.
Oh yeah, Doc is having surgery today because he was out yesterday. Gallbladder or something, but he'll message me when he gets out. Dang, we might lose 300. My kite is correct, dude.
For their CEO Joe Hendricks and the operating performance, and basically just saying, sell yourself.
I don't think we'll hit 230. Well, we might, because the next level is 243. So,
And by the way, this is a company that already has said it's concerned.
I don't want to short right now. I need a pump.
But that is not necessarily.
Kite's a good bear, but he's a shitty bull.
Potential buyer, and that buyer is seen as Burlington Northern, controlled.
Dang, that's nasty.
Berkshire Hathaway.
Yeah, he is. Yeah, we lost 300. Holy cow, should have kept my short. Dude, I short at 405 and then at 415 earlier. That bot got 100 points. You gonna try to long?
What else could be done in terms of the public benefit, but is this the best you could do at being the deal itself? And the idea that UAP already had assurances to a certain extent that yes, you're going to get the go. And if that's the case, if you're Burlington, then you want to do a deal as well. You want to put two deals in front of the STB. You
Dang.
really don't want to allow for the creation of one.
I don't know why my hands want to click long. I'm trying not to long. I was bag holding for 6 hours yesterday. Trying to long. Damn.
Opposition to a activist. City wrote, and quotes letter strikes them as unnecessarily aggressive, possibly counterproductive. By pushing them to be a forced seller, we worry Ancor risks deteriorating their negotiating position and believe a patient approach.
Ooh, ETF goodies coming in today. Hell yeah.
We'll be keeping a close eye on this. We want to see whether that second wave, so to speak, of rail consolidation.
Mine? It's all gone. All three. I only have 3 funded, and those were attached to the copier. I know it's because of the copier, because those 2 were attached, and the funded ticks was attached to the copier. Both of them burned out.
Eastern time, 10-year right in that steady range of 4.3. Be right back.
I don't know. It's Apex copier. I mean, it was working fine for 2 weeks. It's just bad luck with copiers this week. Everybody's blowing up on it on TradeSync too.
Self-injection from my generalized myasthenia gravis, we personalized my treatment.
Can we get 380 again?
Improve daily abilities and reduce muscle weakness.
It's my treatment, my way.
Well, it is close to September. It's really bad for the market in September. But we're probably gonna lose 23,000. Maybe after Nvidia ER. Yeah, we still got 3 minutes, got more room to the downside, and 15 minutes for sure got a lot more room. Might get like small short if we get up to 300 something. Do 310.
Order submitted. That's treatment my way. Ask your neurologist about Vyvgart Hytrulo. Age-related memory decline? Meet new Unol Brain Health. The first and only tablet to combine 2 high-absorption ingredients, clinically shown to improve memory, focus, attention, and more. Trust Unol for more comprehensive brain health support.
My house doctor settlement and I need cash now.
Wow, that drop. That is nasty. I actually don't want to trade today now. I really don't want to trade. I'm gonna get my long out. I don't want long. Holy shit. Oh, you're banking it? Tell me you're banking it. Hell yeah. You know what? I'm just gonna go for it. I'm long. I'm doing 1 long. This shit. Is it eval or funded? Please tell me it's a day traded funded. Hell yeah. Yeah. Get that to pay out and just tag me on Twitter. Or make sure they pay you. Is that for the tournament? Yeah, don't touch that one. Wow, almost 200 points on the bot. Wow. Why are we dumping so much? He's down 1% now. Holy shit. I'm just scalping the long, but yeah, wow, we did. Yeah, we did hit that 243. Now, next level 110. That's way too low.
Should you trade options rather than stocks because they offer higher
I'm gonna go check out the Discord, see how many people blowing up. Holy shit, that's a big dump. That was good for us though. We knew it was gonna dump.
Workday AI agents are making you all rock stars.
Funding Ticks gave those guys the free account, so Funding Ticks pretty cool. I like that.
We can manage our people and AI agents.
I'm gonna buy 5 more before the sales end and just leave it there. What's up, Google? Did you get my tag? The 100K fast track is back on sale for $26. Google. Ooh, that drop. Holy shit, we lost 200. Wow. Alright, I'm gonna try to long.
No one order Bill. Every shot I take, every time I'm
Ooh, I'm almost green. Let's go.
My dad teach me my first jump shot. He taught me, no matter who you are, you have to work hard for what you want. Behind every goal stands a team of believers.
Wow. Oh.
Dreams.
That is nasty, nasty.
Unexpected to last. That's not how we do it. Marshalls, our buyers hustle 24/7. So you never have to compromise on quality.
I want to long on my pro, but I'm so scared.
Orders submitted. Better deal. Because at Marshalls, we believe that everyone deserves the order filled. Order filled.
Family offices have sharply increased their bets on alternative investments. CNBC Wealth Editor Robert Frank is here. They're getting in on the game, what we've been talking about for a while as well, of course. They've been in the game for a while and getting more. Now family offices have become the fastest growing market for alternative and private assets. In fact, the number of family offices with exposure to alternative investments has increased by over 500% since 2016. That's according to new data from Preqin. Now, the growth outpaced wealth management firms, sovereign wealth funds, endowments, just about every other category. In fact, there are now over 4,000 family offices with alternative investments. That's up from just 651 back in 2016. So within the alt space,
Crazy pump. Yeah, don't try to short anymore now. Oh, okay.
make new investments in private credit and private debt this year, with 29% planning to add or make investments in private equity. Private credit is, of course, still a small share of the total family office portfolios.
Why is it moving so much now?
Lower returns. You've got hundreds of billions of dollars pouring into these new private credit funds. So family offices are telling me that returns have started to fall. And 72% of family offices say high fees are the biggest challenge to investing in private markets.
Yeah.
More on the family office boom and alts.
Give me over to an I'm in a long now. Yeah. I got out on earlier. I'm trying to re-long again. Give me a new lower day. There we go. Oh, don't drop too much. We're down what? Almost. Wow.
Which is leading a funding round for some of these AI companies. And basically the only public equities that family offices seem to love right now.
Pump it, baby. Pump it.
And it's the private ones that they are certainly trying to get in on.
What? You long? Damn it. Your side. I told you not to long. Not yet. I've been warning you like 10 times, not too long. Fuck, man. You didn't touch your Lucid, right? Oh, okay, okay. At least the reset's only 100. Yeah, you're not good on bear days. Your sizing. Let's see which account do I need to trade. Give me one more dump on along again at lower day.
Focus on the life you want to build. Experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time.
This is my coffee shop. We just moved into a bigger space, brought on another employee, and ordered new branded gear for the team.
Yeah, a lot of people are blowing up again. And pop firms are eating this week for sure.
Never meant to be beautiful.
Wow.
I was pleased because of my team. I didn't like the person looking back at me in the mirror. I never thought I could afford dental implants. You and your team work within my budget and help me feel confident in the
Order can't order, no. Order submitted.
Thank you.
Congratulations, Cynthia. Introducing our new lifetime warranty on zirconia arches, only at Clear Choice. Call to schedule a free consultation. Meet Luke and Jason from Fire Department Coffee. Two guys with a dream and a little help from Walmart.
We make coffee that supports our community, and Walmart's played a big part. You know, most of what Walmart spends with the products made, drawn, or assembled right here.
We might still drop more. 15 minutes got downside, but 3 minutes is near the bottom, though. It's close to the bottom. Yeah, we actually have more room to the downside. Oh, man. Yeah, we need like a big pump. We're down 1.4% on NQ.
It's global. Design is everyone's business.
MSNBC has announced the date for
Pump it, baby.
our next big live event.
Come out, meet your favorite hosts, have some great in-person experiences, end the day with a dinner and a closing conversation with the long view.
I'm going for long now. I'm trying to catch a knife here. There you go. I'm out. Finally, I'm green on that product negative. No, dump again. I need long.
Taking a little bit of a dip here, lower.
Find it fast track. The ETF is only 3K.
Right now. This rotation out of growth names and tech names continues. As for Treasuries this morning, it's a light data week. We get Fed Chair Powell speaking at Jackson Hole later in the week. We have more buying of Treasuries with yields a little bit lower. The 10-year yield 4.29, the 2-year yield 3.73. So lower yields across the board. Coming up on today's show, off target, the retailer sinking as sales and traffic fell in the quarter, and as the company announces a CEO change, what the incoming CEO told me about the consumer, about tariffs, and employee morale. Plus, Palantir's rapid pullback has stock now officially in bear market territory, 20% off the highs after hitting a record high earlier this month. We'll talk to an analyst who thinks there could be a lot more downside ahead. But guys, today, the news is all about retail earnings. And you know, I like to dig through these reports and see what these CEOs and CFOs are saying about the consumer, the macro tell on the consumer. Because all of these stories have different angles. Some of them are exposed to housing, some of them are doing better than others, but let's just hear what we're hearing about the consumer. Toll, for instance, affordability is the key challenge for homeowners. And here's what the CEO said. People might be waiting to see if rates come down a little bit more. We're going to know a lot more through the month of September, and I am anticipating as these rates settle into the market, we're going to see more demand coming out from all this pent-up demand that's been waiting on the
Dude, I
sidelines.
could have passed those fast track if I traded those.
The Toll Brothers CEO really echoing that higher mortgage rate has been a challenge for people. Pent-up demand waiting on the sidelines. Lowe's, I thought, struck a very strong tone on the consumer as we got from Home Depot yesterday. The CEO there saying homeowners remain
You got that long?
healthy, supported by strong balance sheets, wage growth, and low unemployment.
Oh.
Medium to long-term outlook for the home improvement industry.
I have a long at 170 if we hit.
Which is substantial homeowner equity.
Nice. Good shit, Chris. Oh, you posted passing those too, aren't you? Let's go, baby.
You know, they focused on the professional, and that's been a good place to be.
So yeah, really, the weakness appears to be, would you argue it in specialty? I mean, the CEO sort of indicative.
Yeah, that's a longer. Look, yes, but it's their category, and it's also because they're highly exposed in Asia and in the airports and in the travel sector. So the comment from the CFO that I picked up there, while there are early signs of stabilization in mainland China, travel retail conversion continues to be weak, and challenges persist in the West, including subdued consumer sentiment in the U.S. and Western Europe. So
No, we want to pump so we can short again. 3 minutes at the oversold area now, so it's gonna turn up a little bit and drop later. 15 minutes still bad.
Very confident in our position as we enter the
You
second
sound like a
half.
boy.
It really depends which
Is that you,
category
Google?
you're in and how you're executing. And TJ Maxx has done a great job.
Yeah, comps up for home goods.
Oh,
Comps up 5.
my cousin. Never mind. I didn't look. Jay-Z sound like that.
See the divergence in performance over the last 5 years. These two company stocks where TJX has performed extremely well. As we know, Target has underperformed significantly in terms of the S&P.
People love looking for a bargain. They have good inventory. You know, in this world where we want to see value, we want to get, you know, more for less. TJX has really worked. They've also been able to mitigate the tariffs quite well because they're not buying directly as some of these other companies are. You know, even on Target, I'll share more from my conversation, but they're not blaming it on a weak consumer. I mean, they have some of their own issues.
Ooh, that drop. Wow. About to go long again. Nice short, dude. I'm long. Oh, let's go.
Allie, it's good to see you. Good morning.
Good morning. Orders submitted. Order filled.
Wow.
People beginning to argue that there are shakes.
Orders submitted.
Do you agree? And do you think NVIDIA can maybe replicate?
I'm gonna touch this pro.
Order filled.
Orders submitted. Things, which is ultimately the goods market and the consumer. I guess the question still remains the services market and the consumer. I think what happened yesterday is like sort of much of a muchness, right? We are sitting here.
Can we pump now? There we go. Come on.
We are ahead of the Fed commentary and coming out today, Jackson Hole commentary, and as you pointed to, NVIDIA earnings. So to me, I really wouldn't take anything that you're seeing in these few days with, I would take it with a grain of salt and assume that what we're really getting is
new low day.
that the bull market remains intact and widespread agreement when you look at Fed futures market that we're not talking about an if in the direction of rates.
I might blow this funded futures.
So you see no doubt in your mind we're going to get at least one cut this year?
Yeah, so look, markets and UBS are pretty well aligned. We expect there's about an 80 to 90% chance, depending on when you look, of a 25 basis point cut in September.
I think the real question is what the rest of 2025 looks like. That's going to be, as a lot of the conversations have been this morning on
Order bill. Order submitted.
both political and data respondent, largely looking at the labor force market. I expect that what we will see is 100.
Wow, we might get 100.
In June of 2025. Again, I think the
Oh
placement
shit.
is less of an issue. You know, the Fed funds futures in terms of where we land is in the low threes. And I think that
I'm trying to blow this my funny futures, but it keeps going up.
be a tailwind to markets.
But to grow this rotation
Wow.
AI and big tech, would you tell your clients to buy the dip?
We are definitely, and certainly for the remainder of August, going to wait and see, right? These stocks are up, you know, between 30 and 50%.
No, come up. I need to get out.
The trading, the tariff lows. I think
Bump
that
it.
and they're very, very richly priced, right? There's reason to argue that they can grow into their multiples.
There we go, baby.
You know, the tailwind of rates coming down. But, you know, we are in the 1% pricing right now. So in a sense, I'm not
What's lower
buying,
day?
I'm not
15.
selling.
Okay, let's do
And
it.
I am very interested in what's happening in the credit markets. Now, the credit markets is something that hasn't been talked about a lot. Credit markets are interesting and really complacent right now. They're, you know, at a 25-year tight when you look at IG. I think the reason for that, back to what we were talking about, you know, where the ball's going for the Fed, as opposed to
Big time. Wow.
people are trying to lock in rates. But I think this is a really good example of a time where on both, you know, on a
We
lot
might
of
lose
parts of their
23,000.
allocation, this is the time to wait and see, but not read or parse too much
Holy
into the
cow.
data.
Order submitted. August is always a little weird, and it's proving no exception this time. You know, I just always wonder about your clients themselves. Given this turnaround, we're seeing it now play out this morning as well with the Nasdaq down.
Order
You know,
submitted.
1.5%. Do they get worried? Do you get more calls, or is everybody sort of, I don't know, complacent and or not overly concerned about really what's only a couple of days?
Okay, 3 minutes back to oversold.
I'll answer that in two ways. The first way is that this has been, whether it's from dealing with
Nice.
volatility, emotional or political stress, this has been a really heavy half of a first year. And so I think in general, people are feeling good about their portfolio construction because it navigated well. You know, the high in February to coming back in May. And I think people are really taking a breath. The second thing is that every day, my client base, their children, their companies are getting more and more involved in the practicality and usage of AI. So they're actually really starting to see what it is apart from just, I use ChatGPT once or twice. And so I think there's this balance of having
No, I'm trying to set no on another account.
which was just a beta market, having seen portfolio construction be meaningful emotionally.
I'm up almost $2,000 on this account, but I need 9,000 to pass.
Starting to experiment
This
and the fact that it can
is fun.
productivity from a margin perspective be a sea change going forward. So there is a lot of comfort right now. I think September, for all the reasons we discussed, in terms of really looking at the health of the consumer,
Wow.
that we're not talking about between the high-end consumer and the low-end consumer. As I said early on in response to some of Sarah's comments, I think there's also a bifurcation in terms of goods versus services and staples versus discretionary. So I think that really, and the labor market is going to be what we're looking for and what's going to make people and institutions, hedge funds, et cetera, make any changes in, you know, going into the third
Order submitted. Yeah, interesting. September's historically not a great month for stocks. And to your point about the low end, even the Treasury Secretary this week's been making some comments about if you don't own assets, this is not necessarily a great time as a consumer. Allie, we'll see you with the coming weeks bring. Good to see you, Allie McCartney.
You too. Enjoy the rest of the summer.
We're just over 30 minutes here into the trading session. Here are three big movers we're watching right now. Shares of Hertz rallying, announcing a new partnership with Amazon to start selling pre-owned cars on their platform. Stock
No, don't pump yet. I need a dump. It's second long.
Lazy Boy shares of clothing retailer Guess surging this morning on news of a take-private deal with Authentic Brands, valuing the company at around $1.4 billion. Authentic's going to own more than 50% of the IP. Strikes
You're
again.
not blowing up, are you, Lynn?
Shake up at the top with the company's incoming CEO and outgoing CEO told me
Oh,
about
this
the strategy.
the funding one. Yeah, I blew one yesterday, so I got a spot for one more. Holy shit! Wow.
And what's behind Palantir's deployment? We'll talk about whether or not this pullback is a buying opportunity, with the stock now off more than 20% from the highs 5 days ago. Walk on the Street continues after the break.
Oh, E8. No, that's an eval. I like it. Let me mute him. Hold on. I don't either. Yeah, I like it because you get a 6,000 DD on it. So 9,000 profit target and you get 6,000 DD. So that's really good for me. It's good. But don't buy anything yet. I'm getting them to match the funding tick, so it might be $50 next week. The E8, the new firm, yeah, they're pretty big. They're legit. They're big on the FXI, but they might match funding takes $50 for 50K. So if they do, load up. It has good drawdown windows, so I like it. It's the best time. Sale doesn't end to Saturday, so you have time to buy it. $50 is good. Yeah, Trade. E8 is only Project X. Uh, 300,000 allocation, so I think 6 is max. Yeah. I need to pass my first Lucid. I'm finally trading Lucid now.
Discover more at the Mazda Summer Sales Event.
What's a lower day? 90.
Orders submitted.
One of these exceptional offers during the More to Move You sale.
Orders submitted.
Yeah, bot's still short since 396.
Will take the top job February 1. He's been with Target more than 20 years in merchandising, operations, finance, and he's got a turnaround job ahead of him. New numbers from the quarter show sales are still falling. Comps down 1.9%.
If we all kept our short since 300, we'd be rich. I know Gambit's trying to body dip.
Returning to growth. On how to do that, he said, first we're going to reclaim merchandising. We have big plans for changes in home, for instance, which has been a weak spot in what's traditionally been a really strong place for Target. Second, we need to make sure the customer experience is better in the stores. And third, the how, we will use technology more aggressively. The main message is what makes Target unique is the design.
No more drop. Let's just pump now.
On-trend style.
Right, I'm long. Wow. Keep hitting new low. Wow. What's the next one down? Holy shit. 56 is the next level, and that's it. After that is, I don't know what else. Oh. Almost negative 2% on no news or anything. Yeah. Wish I kept my puts though. I only took $100 on the puts yesterday. It would have been up a lot.
Pressure in the first half when it comes to tariffs than in the second half. And Carl, just one comment. You noted that he started the company as an intern and has been this like long time insider.
Nice.
It reminds me a little bit of Nike. So they appointed
I need pump. I'm deep long on my TPT. 121 average down. Nice. People are saying, what's that platform that everybody hates is down? No, the other one. No, it's that stupid one. I forgot the name of it. Yeah. Quantile.
Anxious U.S. consumer, a consumer that's being choiceful. And Target's numbers have been negative. So the burden is on Michael to restore growth. He knows it's an urgent situation, but what you're saying is very true in terms of nostalgia, bringing back projet, bringing back design and style. And you really need to merge that with technology and a better customer experience. I think now more than ever, the competition has been heightened with Amazon, TikTok, many others, and Walmart doing a great job. So Target needs to do a lot of work really to restore more consistent positive comps. It's been very volatile. Thematically, the overall theme is consumers are looking for deals and bargains. The consumer still has spending power, but there's a ton of anxiety. Specifically, consumers are expecting higher prices. They're also shopping ahead of time to avoid higher prices. So all those things there that you mentioned, and we all want great fashion. Target needs to do better.
Stock's down 8%, which is actually off the lows. It looked worse earlier this morning. Most of what I'm reading is no surprise that Cornell is stepping down. Surprised that they went with
Yeah, get me out. Get me out, baby. Come on. I want money. I don't want to get out even. Come on. Could have got out. I believe, yeah, 1,000 max on eval. Yeah, you're right. Oh, I gotta touch my trader. I haven't touched my trader yet. I'm so stupid.
Will be better for the company. We've also had an unprecedented amount of volatility of orders submitted home and big ticket.
Here we go. Keep going. Yeah, I'm out. Up $57 now. Yeah, take that. I want to get more, so I get a bigger payout.
They are recognizing, and they are also articulating what they need to do. So at what point would you step in and buy?
Well, it's more visibility.
Are you using Lucid? People saying Lucid is down too. Not on Project X, but other platform. Oh, okay. Apex? Gotcha. I'm gonna let my buddy know.
A lot of this is easy.
No, it's not you. Phoenix saying that his Lucid is down on his side of the thing too, so his Lucid is down. Apex is down.
They need to step on the gas on grocery or try to raise that as a percentage of sales or try to compete with Walmart on daily staples.
Yeah.
It needs to continue to be fun and really integrate with discretionary as well. Who's done great is Trader Joe's, and that's a great example in terms of offering strong value. bring that in the fold? Do they need
They
to
do.
use the mix of retirement?
Oh, like, not really. Let me show you how it looks. Hold on.
Mixing and matching a lot of the discretionary items that you get for your birthday on celebration along with food and make that all work together.
Don't worry about it. Just pass it first. No, you can pass it in one day. But when you get when you get it funded, just make sure you only make 200 to 900 max per day. Don't make anything more. But at least 200 get a day counted. It's not too bad.
I think we get to hummus. Always surprised me, Sarah. Yeah.
I like to bring, color that you can relate to.
Yeah, that's what Phoenix telling me too. Free resets, huh?
Top stock in the S&P 500 this year. It's still up about 16% over the last 3 months, but recently down more than 20%.
I'm saving.
We'll talk about that reversal.
Yeah, I got 4. I'm saving it for tomorrow, YOLO. We have jobless claims. Either Thursday or Friday is the only time I can YOLO because I can't save for CPI. I don't have enough days. Yeah. It's only for today. It ends at 5 p.m. Eastern time. I tried tagging everybody.
Our customers deserve the best, and the best just got much better. AG1 Next Gen has launched with upgraded B vitamins and probiotic blend.
I'm saving my points for the straight to funded one.
It's time for the next generation of AG1.
Are you living with dry
Yeah.
AMD? If so, you
I should ask for some freebies. I think I'll ask him tonight when I talk to him. No.
But with Isorbay, you can.
I only got the Tick Trader straight to funded giveaway today. I'll find something to race on.
Isorbay is an eye injection. Don't take it if you have an infection or active swelling in or around your eye. Isorbay can cause eye infection, retinal detachment, or increased risk of wet AMD. Isorbay may temporarily increase eye pressure. Do not drive or use machinery until vision has recovered after an eye injection or exam. Isorbay is proven to slow GA progression, which may help preserve your vision longer.
Okay, I don't know. I need a dump so I can short again, but man, that was nice. That's a nice bump.
Down, up, right, left, inside, out. Sometimes it's hard to make sense of nonsense. Order cancel times. A trusted
Think that's the bottom? Think we're done?
order submitted. Which way is up?
Bye, buddy. Are you coming back? Are you coming back? Oh, did ya? Okay. Bye. Alright. Bye, Chink.
Food is central. Food is beautiful. Factory invests in and helps build restaurant and entertainment companies. The vision is about making a difference in the lives of other people. The future that we hope for.
I think it's chop time now.
Friday's Jackson Hole speech from Co-Chair Powell this morning. President Trump
That was a good long though.
that Fed Governor Lisa Cook, quote, wants to resign now. This is after FHFA Director Bill Pulte called for an investigation into Cook over alleged mortgage fraud. Pulte will join us to talk about that next hour in Money Movers. No comment at this point from the Federal Reserve. Obviously, there's been a lot of politicization around the Fed. The president wants lower interest rates, and now Pulte has dug up what he is saying is mortgage fraud from Cook, and he has proven some receipts. And so sees and why he thinks that she should resign.
Right. We'll see if it qualifies as proof, but that's part of the
I think
discussion.
you can pass the E8 in one day. Yeah, minimum day one. No consistency.
Powell's speech on Friday joins us with some results of a special edition of CNBC's Fed survey. Hey, Steve.
See, this is not bad. E8's not bad.
Unprecedented presidential pressure for a rate cut, unsettled questions about the next Fed chair, and of course, tariff inflation. The survey found that respondents believe the president's most likely to pick NBC director Kevin Hassett to replace Fed Chair
Yeah,
Powell.
hope it drops second long.
Or the governor Kevin Ford. About 70% of respondents but actually neutral.
Short's not done yet. On the 15 minutes, it still got room to go down. 3 minutes are oversold, so that's why we bounce. But I think it'll go down again.
Followed by Governor Chris Waller, and then there's Warsh and former St. Louis Fed President James Bullard. But then there's the question who respondents think the president should pick, and that is led by Warsh, followed closely by Waller and Bullard. Hassett in that question.
Bye, buddy. Good job.
41% of respondents say the next Fed chair will conduct policy independently of the president. 37% say it will be in coordination. 22% are unsure. Those are some pretty dramatic numbers right there. Meanwhile, 69% say Powell's speech will be neutral. 14% say dovish. 14% say
Oof.
won't even talk about policy.
You and Gambit. I bet your Gambit's long.
This year, 25 in September, 25 in December, and 50 next year.
I was waiting for 200 to short, but I'm not shorting now.
So the big question, if Powell talks about the economy,
September's coming up. Get more freebies because I'm out.
with inflation running a percentage point over target, and also forecast, at least by this group and others, to remain above target for this year and next. Guys, we're going to talk with Kansas City Fed President Jeff Schmidt. I've got tomorrow morning, and on Friday, Cleveland Fed President Beth Hannon. Back to you.
Connection lost.
I'm tempted to go long in a little bit. Nice. Oh, you passed?
Just gonna say that, Sarah.
It hasn't been 4 days. Is it 1 day pass? Not fun it takes.
He could be dovish, he could be neutral, or he could not address policy.
Oh, yeah. Wait, it's been 3 days already?
Two of those four would be a disappointment to the market. Maybe he
Oh,
doesn't talk
I
about
guess I
policy.
keep thinking the sales was yesterday. Okay.
Jim
Good
Powell
shit,
made a
dude.
little mistake here, letting things run without him commenting. He hasn't spoken since we had that.
I don't want to buy it yet. Wish I didn't blow mine.
And the markets are now kind of, if you look at the probabilities, kind of wound up for this rate cut. They're an 84% probability. I will point out there's a 16% probability of no cut. That's
Good shit,
risen a
dude.
bit, but still, he may have limited flexibility because of how much the market is
You
wound up.
killing it. You still have your fast track funded or no? Nice. I'm jealous. I need to play this Bonox. I haven't been touching my Bonox in a while. Yeah.
Nice view. Let's get a CNBC News update now, Silvana.
My bot short Apple.
60,000 reservists ahead of an expected ground offensive on Gaza City. The assault is expected to force thousands of people to the south.
Sam, ever since I got that $1,500 or $1,000 payout, I've been cursed.
Comes as Israel considers a new ceasefire proposal approved by Hamas earlier this week. Polish officials say it was likely a Russian military drone that fell and
I can't trade Phidias until they get Project X.
Police say the blast shattered windows of several homes, but nobody was hurt. Poland's defense minister says he cannot rule
That's the one that Doc's been getting payouts on. He always get the 100K though.
and tropical storm warnings were issued in Virginia and North Carolina. Two Hurricane Erin.
Whoa, what was that?
Forecasters are confident the hurricane will stay far offshore, but it is expected to bring heavy rains and
Later.
light currents along the east coast right into Friday, Sarah.
Order
Okay,
submitted.
thank you, Silvana. When we come back, Palantir shares falling back to earth after hitting a record high just this month. We'll talk to an analyst who has been bearish on the stock for a while and sees a much deeper pullback coming. Stay with us.
The digital gold, that is data, has never been more important.
I know we're prepared. Dog hard to get. We're going to keep getting.
Yeah, it is.
At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise. Explore PGIM ETFs today.
Rather than get rich get rich slow, the high yield cash account at Public actually had higher earnings than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
When emergency strikes,
That sucks. So you're not trading then, right? Gotcha. I got this. I think so too. Oh no, I don't think so. I don't know. I gotta go 3 MAQ, get back to my buffer.
Orders submitted. Visit Indeed.com/hire.
Opportunities don't stop.
Good job, man.
Over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. Trading specialists who understand ins and outs of 24-hour trading. It's Schwab. What's your plan, huh? You have one? Talking about what is your plan for a reliable source of power when the next emergency strikes? Well, check this out. It's called the Patriot Power Generator 2500, and right now it's $500 off for Patriots. See, they took a page out of the military's playbook with portable solar power, and now we get to use it in our own homes. What's even better is that this solar generator can power critical appliances like the fridge, your microwave, your CPAP machine, so that you're prepared for whatever emergency strikes.
Yeah, on the fast track, you can hit the target in 1 day, but then you have to flip 4 more days to get funded. So it takes 5 days to actually pass.
10,000 investors and venture capitalists who believe in our mission to make second home ownership more accessible. We're expanding globally, and we're inviting you to become a part of it. So if you've been thinking about investing, now's the time. Join us before the window closes at picasso.com/invest.
Tech sector under pressure again today after coming off the worst performance in a couple of weeks. Some of the year's best performers lose momentum, including Palantir, on pace for the 6th straight day of losses, now down about 23% from the highs. Longtime Palantir bear Brent Thill joins us from Jefferies. Brent has a sell rating and a target of 60. Brent, it's good to have you. You actually wrote about this a few weeks ago, in which you called it a disconnect between valuation and achievable growth.
Oh shit, long again.
Order
Hey,
submitted.
good morning, Carl. Overall, tech is under pressure.
Order
across the board.
canceled.
This is unique to Palantir. Everything that we cover is down given the run that we've had. So I'd say that part of that
Order
is not
submitted.
Palantir related. It's more market and technology plus software related. For Palantir, there's no multiple that's ever been in our coverage universe that sustained this multiple. And we've said repeatedly, this is a phenomenal company. This company is executing at a level that no other software company is executing. The challenge becomes the valuation. The minute that they move one
You long?
way down, the stock's gonna.
I hope ISIS can get out.
So we haven't seen a deterioration in the fundamentals. That's not the call. The call is you can't trade 8 times revenue. There's no precedent.
Yeah.
If you put the most expensive software multiple on Palantir, you're
And we have FMOC minutes today too, so
even if you get the benefit of the doubt, which we have in terms of the price
yeah.
target, you have material downside on the multiple. So this isn't a question of the fundamentals. We've said repeatedly that they're executing better than the majority of the industry, and executed on a rule of 90, which is pretty incredible. Top line growth and margin together equal that. No one else is even close to that.
Canceled.
The question is sustainability, and then can they continue the acceleration? But really, this sell-off has really been driven more as a broader tech software sell-off.
I gotta go
than as
heavy on this
anything else.
150
Well, yeah, as
TPT.
you pointed out a couple of weeks back, I mean, not even 74.
Order submitted.
And I can remember some multiples like that from the late 90s, Brett, but it takes a while to get back to anything close to seeing that. What about the sell-off in tech overall? I'm just curious. It's August. Retail flows may have slowed. I don't know what you're hearing from your client base as well, but I mean, it is getting pretty significant here, at least in terms of getting some people's attention.
Yeah, and our Jeffrey's desk, it's basically risk off. We see a lot of AI winners get trend. At the beginning of the year, it was all about macro, right? When tariffs hit, everyone's concerned about macro. We didn't have the macro concern. We didn't have the fundamental pullback.
Oh, AV's coming on this week on voice chat with us. That's gonna be good. Yeah, he want to listen to your insight, so I told him you got good insight and stuff.
You've got companies like Oracle, almost 40%, Microsoft still up 20%. You've had really good gains. I think many don't really know what the shape of the curve looks like in the back half. We don't know what.
Should I pay for the order books and just stream it on the YouTube so people can see it too, or no?
Days and confusion, and are we going to delay decisions? So right
Yeah,
now,
that's not bad. Do they have that on Tradeovate or no?
Do with anything fundamentally that we're seeing.
That's what it is. That's what call. Okay, I'll look into it.
Nobody changed their capex plans other than getting even higher in terms of what they're planning on spending. How important is Nvidia next week, though? If we continue,
It's not illegal, right, to show that?
I mean, they're absolutely critical.
I remember Mila was talking about some guy showing the order book, a book map on YouTube, and kept getting hit with copyright strike.
So to your point, David.
Yeah, but that person kept getting strike and redoing the channel and stuff. So.
Nvidia or the enabling AI infrastructure, and that's what continues to work
Yeah.
right now in tech. Is nothing in the application layer and software. It's all infrastructure. And that's what investors are staying in right now because we're continuing to see this AI build up. We haven't seen the enterprise.
Hey, Messi. I'm mostly out of freebies this month, so September I should have a lot more for you.
Salesforce, is that a concern to you in your coverage universe, given AI's rise and the agentics and what that may mean in terms of their ability to lose share essentially?
It is right now. Again, I think we're seeing the application group like Salesforce and Adobe down the most. So a lot of
Yeah, I have it. I can give it to you. You need it.
That's in. We don't think the disappearance of Adobe and Salesforce is overnight. We think they're in a better spot than investors giving them credit.
Dang, it's gonna drop again.
So we think if you want to take the opposite side of this, that group has been hit the hardest and probably
Yeah, it went long.
expecting. We just haven't seen
Holy shit! Everything went long.
That's why again all the
Holy crap!
infrastructure and again the energy companies, the data center companies, Microsoft, Oracle, anything is providing enabling infrastructure to let those applications above that infrastructure work. So that's already been embedded.
That is
we share
ugly.
concerns, and I think those companies are taking it serious. They're putting the right pieces in place.
Yeah.
Order submitted. Come alive. It's going to take time. It's a less than 5% of total revenue.
Order filled. Order
Software
submitted.
companies. So as we've said, 26, 27 is a more critical year for
Order
inflection
canceled.
for these AI application
That's 600 more, and I'm back to my buffer. I got this.
aren't there in stock right now because they just don't see the revenue.
Right. I mean, you keep thinking, you keep talking about software.
Damn, it's 10 o'clock already.
Yeah.
Holy cow! Wow. New low today.
I just wonder if you see anything different about that.
Well, MIT came out with a survey and said 5% of enterprise AI is failing. And
Order
we've
submitted.
said this, that in any new technology, we're not going to wave a magic
Order
wand.
filled.
There we go.
I mean, our firm worked deploying AI in multiple areas. It takes time to train. We've had multiple training classes in the last couple weeks here that our entire firm is going through. Then you have to
Order
get
filled.
use cases. Then you have to
Order
get
filled.
It takes time. This isn't like loading up.
I keep hitting this long. I'm I'm liking it. I like it. Don't dump anymore.
Like this doesn't happen that quick. And I think everyone's saying the same thing, which is like, okay, I see it in my iPhone. Well, why am I not seeing it in my enterprise?
I mean, I gotta go pee.
26, 27 of that. That was 25 of that. And we think, again, that many have gotten too overzealous about the return of AI. We are excited over time that this just effectively, this is like building the pyramids. This is not going to happen overnight.
Right. Yeah, you're not alone on the training part. What's happening in-house over here, too. Brent, appreciate it. Talk soon.
Thank you.
Brent Thill on Palantir.
Coming up, competition in the ETF business is heating up. Vanguard getting into the actively managed ETF area. Ron Barron also eyeing ETFs of his own. We're going to talk to the former CEO of Engine Number One, now turned head of ETFs at TCW. Talk about what's going on in that space. Also, Disney is gearing up for a major ESPN announcement this week. Could usher in the new era. Streaming wars. Bring that news ahead of a big interview right here on this show. I'll be joined by Disney CEO Bob Iger and the man who runs ESPN.
Let's try this. My funded futures again. 57.
Order submitted. Order canceled.
Real-time exchange sector
Order
is sponsored
submitted.
by Sector Spider ETFs.
After doing it all, a Lazy Boy recliner takes you from zero to lazy, melting it all away with comfort that doesn't quit. Feel for yourself at Lazy Boy. 0% interest for 48 months. Lazy Boy, long live the lazy.
When logic bends,
Jeez.
uncertainty is shafted. When left is right and right is left, which way do you turn? Go beyond the headlines. A trusted global perspective. The order canceled. Know which way is up.
With the shield level annuity from Bright House Financial, your portfolio can
Order
benefit from
submitted.
growth potential with a level of protection from market volatility to help you follow
Order
your plans
submitted.
wherever they take you. Bright House Financial, build for what's
Order
ahead.
submitted.
Doors bring us together. A dedicated fidelity advisor can help you open those doors.
I'm just trying to long again.
Taking off, but so is your sound engineer. You need to hire.
I need indeed.
Okay, go down 6 hour long with you. Let's do this. I know. I'm scared now. I'm gonna wait. Fine. How long? 6 to 8 with you.
Order submitted.
I'm out.
The digital gold is data. Has never been more important.
I got $122 payout for TPT. And go shopping tonight. Good job. What? Again? You didn't blow it, did you? Oh, I thought you didn't touch those. The good thing is, good thing is DLL though, so you're still good. Tomorrow just YOLO on data, you know what I mean? Oh yeah, save that for the tournament because I need you to win the 800 so you can give me some money.
Share insights, information, and all of the details.
I mean, if me and him on a 150, we have a better chance of winning and then split our money and go each in, right? Gambit? Yeah, we have our little cheat system in. Holy shit. All my longs are getting hit now. Holy cow.
ETFs. Nice to see you. Just keeps getting bigger, particularly on the
Order
active
canceled.
side, not just on
Dude, we're down almost 2%.
TCW
I'm long at 57 already. I'm trying to blow this my funded futures, but it's not blown yet.
Even fixed income active ETFs, which are the newest of all, are growing over 40% every year.
Where are you seeing the most client interest when it comes to what you guys launched and or what you're thinking about launching? We were talking
And
about
it's green. Wow. That is too funny.
Is next going to be attracting a lot of interest?
Gambit, I had $12 DD on this my funny future. I'm up $100 now. Guess I'll just go for another payout. Not my funded futures, the old one. The starter plus funded. Yeah.
We've raised over $1 billion in a core total
That was a
return
good long.
ETF that also has a very high 6% yield target. So that's Flexer by TCW, and that's a great example where people aren't buying only mutual funds. They're really
I should stop trading. I'm way over trading.
part of the portfolio. So top in its category, and we see other competitors in that
Guess
space.
yeah, it's been boring last week, but this week is good, yeah.
And so
I want to get this Apex to pay out. It's 300K, so I can do this one.
And so what we do at TCW is we take that 50-year heritage as being a fundamental.
Now, let me set up this tick raffle tickets.
Themes to the market. So AIMD is a way to get exposure to artificial intelligence broadly. Another one, powered PWRD, is a way to get exposure to this very, very broad.
Ooh, I might be able to get out this 150K. Go. 109. That's good.
The way that we would think about it is if you start today and you're looking forward, there really is an opportunity for active management. If you look behind us when money was
Streamlab.
manager, there was a mushrooming of passive, which other competitors really anchor on the passive part of the business. At TCW, we've
And
always
bot got like 300 points down. Actually, almost 400. Yeah, everything's way oversold, but doesn't matter now. Happened to me too. Like it's oversold, and I got stuck in the long for all day.
To beat the indexes.
I wonder if there are any thematics in equities, not to give away secrets or R&D, but that do you think are interesting, nascent, and haven't yet been codified in an actual ETF? Things that we might be talking about in years.
Yeah, I mean, I think there are a lot of things that could be put into an ETF. What we wrestle with at TCW is we don't want to develop a thematic product that is so narrow that we're not really helping you, that we're sort of expecting the investor to decide which battery.
Good luck. Get your tickets in. Straight to funding.
So what we do in powered is they're very broad. And so in the case of something like powered, we're holding nuclear, we're holding data center cooling, we're holding energy, we're holding efficiency play. It's so very broad.
Don't miss out, Gambit. Straight to funded, okay? It's on YouTube. The straight to funded giveaway. Just type in the Bugatti thing for the tickets. I'll get you something Monday. Actually, I can get you something today. Let me know.
But I mean, it's been many years that we've noted.
Dang. All my longs hitting again. Wow, nice.
ETFs can do better.
Yeah, I think very different. Maybe come to the bond market and talk about in the fixed income.
No, just cloudy.
In the fixed income part of the portfolio, the indexes just aren't that good. The indexes were never designed for long-term investing and savings, and so in a way,
Does it make you sad? No, some people get sad when it's raining.
Issue selection. So we think that when we're seeing the market in terms of total flows across all mutual funds, all ETFs, it really is going into active. It's not going into passive from a lot of investors.
It's different. Not for you and for you it's different now because y'all been getting payouts, but if you're not getting payout, you're gonna be stressed out.
90% of the strategies are above median. So if you think of, you're performing or underperforming in any particular year, that's an important metric when you're selecting an active manager, which is through
A
time.
lot.
Do they
You
tend
begin
to
600,
be
right?
beating index or not?
Order filled.
Themes is
Order filled. Order
Yeah.
submitted.
place to be active because you're not just picking
Order submitted.
again, one narrow niche. You're asking the active manager
Order filled.
to have sectors that are underrepresented in the index.
Order filled.
Because the indexes are so maxed
Damn.
out.
Order submitted.
It's keep getting low a day.
Thank you.
Coming back to the break, it's full steam ahead for Disney set to launch that ESPN long-awaited new streaming service this week. Of course, David brought you news about the coming interview with Iger. Just the start of this aggressive round of rebundling. We'll get details after the break as we got the
Order
here
filled.
on the S&P and
Order filled. Order submitted.
Mounjaro for adults with type 2 diabetes.
Order filled. Order canceled.
Nice. Nice. I gotta size up now so I can pass this shit.
See me.
37.
Order submitted.
38.
Order submitted.
And strength. See your unshakable spirit.
Mounjaro for type 2
Order
diabetes.
submitted.
Don't take
Okay,
Mounjaro.
let's see what else I gotta do.
Or you or someone in your family have medullary thyroid cancer
Huh?
or multiple endocrine neoplasia syndrome type 2. Stop and
Yeah, I can hear it.
right away if you have an allergic reaction, a lump or swelling in your neck, severe stomach pain, or vision changes. Serious side effects may include inflamed pancreas and gallbladder problems. Taking Mounjaro with a sulfonylurea or insulin
Order
may
filled. Order filled.
if you're nursing, pregnant, plan to be, or taking birth
Order
control,
filled.
or scheduled procedures. with
Order submitted.
Yeah, but people are shorting like Top Step. I know they're getting milk, but everybody's shorting it.
Order canceled.
Scott, what it takes to do diabetes
Order.
differently.
Order filled.
Ask your doctor about once weekly Mounjaro.
I'm actually doing really good on this one, Pro.
Thinking about
I also had two. Those ones been alive for like 100 days. I'm almost back to my buffer again, so. No, I've been buying the dip now. I can't short this low. We're negative 2%. See? I got a $129 payout, and then other ones need 5 more hundred, and I'm back on the buffer.
Order submitted.
Finding the perfect balance of surprise and delight is the key to a truly unforgettable mountain vacation.
Order
And
submitted.
there's one place the expected, where you're sure to find it. Beaver Creek. We'll kill that right today.
If you're a pro, top quality bear paint and kills primer are available at an everyday low price only at the Home Depot. You know, there's only one place to get the best value, service, and durability.
Hey, what's up, Gal?
Products same day, next day, or whatever day you need. Free of charge. Exclusive at the Home Depot.
I think sooner they're gonna get caught trying to long all the time.
Launching its highly anticipated streaming version of ESPN. Looking be just the start of the rebundling.
Order submitted.
Well, Sarah, a new chapter of the streaming wars starts tomorrow, and it's all about the power of the bundle to reduce churn. The launch of ESPN.
It's not a dude. So, Gal. See? Take notes, Mugo.
Also bundling its new unlimited ESPN app plus Fox One for $40, and is pairing its ESPN app with NFL Plus, also for $40. This is all part of Disney's plan to supercharge its streaming bundle to make those subscribers as loyal as cable subscribers for decades.
Mugo, because it's a dude catfishing me in game for 5 years.
Subscribers in 2011, a number which declined to 61 million.
No, it's a dude.
So will
No, it's a dude. It's a dude. Oh, my Ninja Trader died. What the hell? Reset. No, it's a dude though. Yeah, for 2 weeks doing that, that's kind of odd. That was weirdo. Giving Filipinos a bad name.
Opportunities for the sports fan as we move forward.
Oh shit, I'm long somewhere. I can't see my position. Hurry up, log in. Man, I tell you not too long. Wow.
Don't miss it. It's gonna be right here on Swap
Submitted.
Anywhere else I'm long? Okay.
Order submitted.
Holy shit. Another new lower day. Wow. And this whole time is like 2 seconds only. Yeah. I mean, I like it. I'm not complaining, but 35, 37, 37. You can pass Lucid in one day, right? Oh, alright, cool. Oh, I'm up 1,000. I have not passed a Lucid yet, but now since Project X, I can. Actually gonna trade. Well, I'm playing MNQ. There's no way I'm playing NQ with a 50k on this market right now. Yeah, he's crazy. That's a crackhead. Hey, ISIS, and you guys got the tickets for the YouTube? It's Tick Tick straight to London. Oh, I'm just asking. I don't know. Yeah, it's 37 tickets only. Usually we get like 60 or 80.
Makes it so easy. Get started today at customink.com. If you're shipping
And so Dad to get on.
Sponsored jobs on Indeed are 2.5 times faster with first hire. Visit Indeed.com/hire.
Goldilocks needs a place of her own. It's fast. Thankfully, she's on Reddit there. They got the ability to do everything. And with so many options, she's bound to find exactly what
I'm
she
gonna try to aim for a $200 payout on this pro.
Thanks for walking us through the plan.
Have fun with this.
Order submitted.
First, connect us to what's important. A dedicated fidelity advisor.
Ooh, the pump.
Backed by a team of specialists.
Nice. Oh my gosh. I need 109 to get out of this other eval. Nice shit.
Hi, I'm Josh Brown, CEO of Ritholtz Wealth Management and the newest contributor to CNBC Pro. I call it like I see it, and that's what I'm bringing to CNBC Pro subscribers.
Join Pro for exclusive access to Josh Brown's best stocks in the market.
About to start this race because let me get it started. Close the entries and gonna start. You got your tickets, right, Isis? Okay, I'm about to start it. Since I'm not trading, get this set up. Names.
To transform a company, industry, economy, generation. Because grit and vision working in lockstep puts you on the path to your full potential. Old school growth, new world ideas. Morgan Stanley.
Did you hear? A secret hoard of 1932 $10 gold Indian coins have been found. These gorgeous 1932 gold coins are as bright and shiny as the day they were struck, and less than 400 of these gold coins are available. Coin experts are calling the secret U.S. gold coin discovery a once-in-a-lifetime opportunity, and you can own a piece of the hoard. When you call, you are guaranteed a 1932
Gambit.
gold coin featuring Lady Liberty.
You got your tickets in, right, before I start? Okay, I'm gonna start it then. Top 3 might be winning. Oh, bot went long. I don't think I want to take a long. Should stop trading. Oh shit. Hell, nice. That's a long hold. No way, Daz. You might win. No, Daz. What the fuck is this? Zelda. Sorry, that's too loud. You got enough points. I got you, Zelda. That Mr. Long. I'm done. I did not want to overtrade. I should be done. Yeah, I am. I'm logging off. I'm gonna try evals later. Good day. You want 150K? Is that what you want, Gambit? Just let me know. Okay. DM me your email and TPT. I'll ask him. Man, I wish I didn't blow my shit from the copier, man. Everything is green. I'm so mad now. What? No, yeah, well, yeah. 50-50, that's 100. Huh? Yeah, that ETF was a PA. I just got it yesterday. And it was attached to the copier. Which sucks, because everything else is green. Like, super green, too. I think there's data for payroll data, I think. Non-payroll. I mean, I don't know. I don't think so. Hold on. Let me see what. Oh, Fed pals tomorrow at 9. What color is that tomorrow? You see it? 7:30. Is that red or yellow? It's on the. Okay. Is that? Okay, never mind. Then. think Redfold is the one that's bad. Or you can save for CPI, Gambit. CPI is September 11th. Yeah, but there's no rebuild. Lucid doesn't have any rebuild. You let it sit. Okay, I'll do that too at wait, that's 7:30, right? I don't know. Oh, Jackson Hole. It's Jackson Hole. Jackson Hole's big.
Still to come this hour. Marathon Asset Management's Bruce Richard, opportunities and private credit, how he's putting his more than $20 billion in assets to work.
Next to Monster Hit shares of Labubu maker Pop Mart higher after nearly 400% surge in profits. We'll take a look at the viral toy and the more than 650% rise in the stock over the last year.
I think the bottom is in. Well, no, the 15 minutes still showing it can still drop. Yeah, it still looks like it can still drop, so I'm not gonna long yet. Bought, yeah, bought out at like 80 points.
Gina's got the look.
That never gets
Dude,
Talk about these.
Bot is killing it today.
If you're on Medicare and you get this, you could end up with this. Unexpected out-of-pocket costs, which for those on Medicare or soon to be, is a good reason to take charge of your health care. So consider this, an AARP Medicare Supplement Insurance Plan from United Healthcare. Why?
Dang, look at that bump. Wow. I'm not chasing it now.
By paying some of what Medicare doesn't and making your out-of-pocket costs a lot more predictable. Call United Healthcare today and ask for your free decision guide. Learn more about plan options ready for your needs. Now, if you like this, greater freedom, you'll love that Medicare supplement plans have no networks and no referrals needed. And doctor, and specialist, anywhere in the U.S. as long as they accept Medicare patients. These types of plans also give you more flexibility when traveling in the U.S. Your plan goes with you anywhere you go in the country. Even better, Medicare supplement plans with the AARP name are plans endorsed by AARP. Call United Healthcare today for your free decision guide. So, if you're on Medicare and want less out-of-pocket costs and more peace of mind, consider adding this, an AARP Medicare supplement plan. Take charge of your healthcare today. Just use this or this to call United Healthcare about an AARP Medicare supplement
I'm
plan.
gonna be short.
When I started Walton Goggins goggle glasses, I turned all this fancy prettiness into a classy looking logo. It's about that sweet thing everywhere. Luke and Jason from Fire Department Coffee. Two guys with a dream and a little help from Walmart.
We make coffee that supports our community, and Walmart's played a big part. You know, most of what Walmart spends is the products made, grown, or assembled right here in the U.S. So we can invest back into our community. Walmart, huh? Who knew? Now you know, Jerry.
And that is how you grew a mighty fine American business.
September 16th, CNBC teams up with two-time NBA champion Kevin Durant and Boardroom for Game Plan, exploring the business of sports, music, and entertainment. Register now at cnbcevents.com/gameplan.
Overnight about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to sophisticated investors, beginning investors. I'm always looking.
Closing bell overtime, weekdays 4 Eastern, and streaming on CNBC Plus.
Money Movers on Solana